Good morning, Whaler. Thank you. What happened to my high-low ticker? Hmm. Right now, I'm going to give it a few minutes and see how we open. I might be trading more commons than options today, given how high the VIX is. The premium on everything is just crazy. In space, back 2760 this morning. Apple is up to 283. Futures popping a little bit. We got SPY upside 298. And Jenny B is in Twitter. $36.50 March 13th calls at $1.57. I'll go look at Twitter. Probably on this pullback here. I'm not going to get into anything just yet. APT halted. Downside. APT halted on that move down to $16 this morning. Good morning. That one's one I'm watching for sure. I'm in puts, but I got in them last week. Keep an eye on that one. Obviously, for a company that makes face masks that typically go for, I think, $2 for a quarter. I saw a seller on Amazon that actually sold, I think it was, it was like 100 of them for $800. Yeah, they're price gouging on Amazon on those things right now. What's Microsoft doing? 165. And Amazon downside now. High a day 1913 down at 1892. What's Apple doing? 280. BA 277. ES is dropping now. SPY as well. Guild 71. They had some acquisition news. They acquired another company this morning, I believe. No alerts yet this morning. We do have PMI data coming out shortly, so we'll see what kind of impact that has. Cost moving up. Oh, it is. Cost ER March 5th. Next ER. I'm going to wait until these PMI numbers come out, I think, and see what happens. APT is unhalted. Listen, there's a lot of stuff, cost being one of them, that I like. That pullback and where it is. It's just been, again, a lot more no follow through. We'll see what happens. I'd like to see up around 300 what it does. Roulette bullish in PayPal. On that pullback. March 6th, 110 calls. February sales numbers will come out this week. Yeah, Omar, they should beat. Bobby, good morning. Space just alerted on the stock side. SPY moving back up now. Little bit. So right now, just about every sector slightly green. SpaceX Tesla contractor hit by ransomware attack. A Colorado-based parts manufacturer that does work for Tesla and SpaceX was hit by a ransomware attack over the weekend. The website containing the stolen files included folders from Tesla and SpaceX as well as Boeing and Lockheed Martin. Interesting. Still waiting on this PMI data. I like PayPal, and we did have an alert on it, but not quite ready to take anything long yet. So the manufacturing PMI numbers are out. Thanks, BB. Oh, so there's a second round of data coming out in 15 minutes. See if Apple can break that opening wick on that first 5-minute candle. J-Bug, good morning. Square just tried to break its opening wick. Yeah, I'm just kind of watching, see if it can break that 5-minute candle. I'll tell you, I don't know if you guys had the same experience last week. It's happening again this morning where the platforms are just, all of them, I'm having issues with all of them except for TradeStation. It's the only one that's been working without a problem. But E-Trade, I'm waiting on a quote to come up, and it's just taking forever. We did have some dark pool in Square. Yeah, TradeStation has not. I have not had any issues with TradeStation, Omar, at all. Like through all of this, Fidelity I've had issues with, E-Trade I've had issues with, but TradeStation has not. It hasn't choked at all. Yeah, no problem. I mean, it's been so solid that I'm like considering moving more over to TradeStation just because it's been so smooth. And that could be because they have a lower user base, or it could be because it performs better. I don't know, but it's been working great. So MDP, I've talked about a few times, down at 25. And their CEO did make an open market purchase last week. Bought, I think, 10,000 shares. %9 dividend yield. Some puts coming in on Disney. Roulette bullish on Goog. Oh, J-Bug, I don't even know, man. I don't have those numbers. I just know it was a lot. Couple hundred, I'd guess. Yeah, J-Bug, I did well on some puts in a few different tickers. Made money on Tesla, Amazon, BA. Robinhood, system-wide outage. Yeah, J-Bug, I mean, I have I have other things that I have to work on, especially when it comes to, a huge trial week. Moderator duties. So isn't Piton, that lockup was today, I think. If I remember right. I'm not sure. I want to say that their lockup expiration was today. I mean, not load up J-Bug, but I've definitely started, picking up. I picked up some BA commons. I picked up some Apple commons. Picked up some AMD commons. I'll probably pick up some Disney, but I'm not loading up yet. Until we have a solid solution to coronavirus, I'm not loading up. But there are, certain tickers that I've been waiting to add to the 401k, and I did some of that last week. Yeah, J-Bug. I mean, I'm watching it, see what it does. I'm definitely interested, but I mentioned first thing this morning that with the VIX where it is, options contracts, the premiums on a lot of stuff is just ridiculous. I did good, Bobby. I did good. Yeah, I had stuff that I was doing for Black Box. My wife was out of town traveling, so I had both kids, that I was dealing with normal day-to-day stuff, so it was hectic. I UAL, but let's go look at the chart. Give me a minute. We'll look at the chart on both. WHO is gonna have another press conference today. Yeah, airlines just gotten hammered. If you're looking long, Skatey, I mean, I would same thing I just said, like coronavirus stuff. Like, I would wait until that is done, but should be a good support area. But you could see, if this coronavirus thing, I think it gets worse before it gets better, my own opinion, but, you could see it pull back here to 36 or so, which was support back in 2016 and 2014. There's a lot of people that are using 2008 to compare for areas of long-term support. God, American Airlines 1775. Yeah, I think we could see more pain before this gets better. Yeah, listen, I don't have a good reason for that thesis. So, yes, spy contracts are ridiculous. Everything is the premiums on everything is ridiculous because the VIX is high. So volatility is high. So there's a lot of premium being priced in. That can't even be real. That sounds like a movie. Nothing. I'm sitting on hands at the moment. I can't hold hands. I'm sitting on mine. So unless your hands are on my butt, that's impossible. I'd say no means no, Teresa, but I'm not moving them. Spy. Futures falling. Spy is falling. And this is why I like futures. Because you don't have to pay those spy contract premiums. Sounds like APT is halted again. All right, I got Hell's Bells going to come join me. Let's see what Hell's Bells has to say. Hells, what's up, buddy? Hells, what's up, buddy? Can you hear me?
Yeah, no, I can hear you.
Oh,
you.
how's your morning?
Good. So this is what I've done. I doubled my short position on MGM, and I essentially have quadrupled my short position on SPY, but that I don't anticipate holding all the way through the day. I want to scale back on it.
I like that. I like the short position on MGM for sure.
No, I did that last week, just because I don't see that scenario getting any better.
No, I understand the thesis for sure. Makes a ton of sense. When I saw that, there's certain tickers like PayPal. We saw, I think we had an alert on PayPal this morning. Yeah, and it is actually, we've had 4 alerts and they're all negative at the moment, and they're all bullish alerts. So I'm not looking to go long anything just yet, but companies like PayPal, you think, the stay at home, shop at home, consumer at home, that's a company that stands to benefit.
I agree.
But yeah, I
I
think
agree.
casinos and
My
travel.
overall thesis on all that stay at home, shop at home shit. It's like if the supply chain is fractured, you can't stock shelves.
Yeah.
So what the fuck are people buying?
Yeah.
It's not so much that my mentality right now is not so much that we're on the brink of the end of the world. It's more that this won't be stocked.
Right.
At least not how we're used to. And as Americans, we get pissy when they don't have the right type of milk for our coffee, much less there just not being any milk at all.
Yep.
But think about it, you got fuckers sitting there screaming and yelling because there's no oatmeal milk or oat milk or whatever it's called.
Yeah. Yep. No, I agree. I mean, until this stuff gets resolved, there's not a whole lot of reason to go long on anything. Unless you're just, I picked up a little bit of Apple in the 260s because I don't give a shit what happens to it for the next year. But outside of that, I don't, until this stuff is resolved, it's going to get worse. Actually, MGM puts are not bad. The 2350 March 13th, $1.21 by $1.74. Really not too bad.
No, they're not. So I'm in the 25s.
25s being 226 by 283. So you got 280 in premium.
In the March 6th. I should have gone out further, but I'm hoping they cancel March Madness by Thursday.
All right. Well, they do have the reason I'm looking at the third. So they have their dividend. They go ex-dividend on the 9th.
Okay.
23. We're at 23.
And I may cover these and find a different entry.
I think I'd like to go out to like the 27th. Let's see what those look like.
At this point, I'm up 120% on them.
Nice.
So
You get another week, the March 27th. But there's no volume in any of these.
no, there's not. That's the thing. It's like you got to sit there and limit order in.
The 24s for March 13th are $1.84. That's not too bad. I don't know. I feel like some of the trading that I'm trying to do right now feels like this. Like, okay, we have our reasoning why we think MGM can take a hit, and obviously the market conditions. I'm a little biased to continued downside, but it's like I don't see anything that I love in the charts because all those previous areas of support and resistance are just there in a lot of charts are not being respected at all.
No, and MGM has been obliterated,
Yep.
but it was obliterated when I got in on the short.
Yep. It's one of those where you think you're chasing and then it just keeps going.
It just keeps on going. Exactly.
Yeah. So you have to go, okay, worst case scenario, where does MGM go? What's the potential? How far could it go? Well, I can see $17 back in 2015. You can see 2008, which a lot of people are looking at levels from 2008 as, okay, if anything, these should hold. And that's down at 951 and lower, all the way down to 830. And May 2009, it was $2.35. How is MGM at $2.35 back in 2009?
It's crazy, man. I wonder if we're going to get legit opportunities like that to scoop and stash.
That would be, yeah. Set yourself up for, okay, guess what? In 10 years, I have MGM at $3 in 10 years.
Right, exactly.
When it's back at $60, $70. Yeah, that's crazy. That thing, to 2007, September, it was 101 before dropping. It looks like it actually dropped to, let's see, how low did this thing go?
I also had the
68.
SPY today expiring 300 calls pulled up. If I think that we're going to move back the other way.
300 calls? Okay.
The 300 calls.
Yeah.
I haven't pulled up. It's like if I think I see something, I'm going to take them back the other way. And those things are moving fast as fuck.
Yeah.
And right now at 82 cents by 84 cents, it's like that's.
Yeah, when you're getting these kinds of moves, like normally I would look at SPY at 296 and go, yeah, 300 is $4 out of the money. But the moves we've been getting, it's like that's definitely doable.
Exactly, especially same day. Well, what we saw on Friday in the last 15 minutes, it's like anything's possible.
Yep.
Still scratching your head over that?
Not after your text, it made sense. But yeah, I mean, I did pick up like 10 minutes after the close. I picked up that 280 put.
Okay, so what expiration are you on those 280s?
I got, I think the 6th. Let me go look. SPY.
I'm in the 4th 280s.
Yeah, I'm in the 6th. So I got those, and I'm red on them, but I got them at 294.
It's not bad. You'll be green on those if we break under 294, like for real.
Yeah, I agree. And the only reason that I decided to take those and hold them is it's a bit of a hedge on some of the longer term positions that I have. So it's like, okay, if they expire, they expire. If they go green, I make some short term gain off the losses that I'm taking in the longer term accounts. So I'm okay with the risk. God, AbbVie. where's it at? $84. I think it hit. I need to go look at that one. I might have to add some. $84. I want to see how low we got to last week. Down around 81, 81.60.
UVX, sorry.
Nope, go ahead.
UVXY is having issues getting over the 89. It has not done it yet. Actually, it just did it.
Yep.
But it's pulling back. So it hasn't been able to get above it. If it gets above the 89, like it just did there, it's like SPY's going to spill its guts.
Yep.
The momentum just isn't there on either side right now.
There was a lot of that last week. I mean, it was like overall down, but like we were talking about last, I posted it a couple times. Like all the big moves were happening after hours, and then there was a lot of chop during the day, like just pure indecision. Up a bunch, down a bunch, like huge swings, but it's just indecision.
Just like I finally got approved for futures trading and options trading on my Interactive Brokers account.
Okay.
So I'm actionable there now where I wasn't before.
I like trading those micro futures. Just I can get in and out so quick, and there's you're not paying the premium of an options contract. There's no like digging through, like if you're just scalping, there's no digging through strikes and expirations. It's just I'm in, I'm out.
Which is what you want in that environment.
Yep. I will tell you, for anyone that's listening, regardless of how cheap those micro futures are, if you have a small account, you can still, it's like death by 1,000 paper cuts if you're not careful. It's shit, I lost $25. Shit, I lost $25. Shit. And you could very quickly be down, $200. And if you're trading $1,000 account, there's a couple people watching. Less than usual, but I was also not live at all last week, so I'm not surprised. My wife was out of town last week, so I was dealing with both kids, all the trial members. It was a busy week last week. And then obviously
SPY coming down to touch the 89.
All right, I need to pull up some SPY charts.
Gotta let my pup outside. I'll be right back.
All right. You can see this 285.80 acting as support here. Has a few times. Down to about 284. Tell Hells you're watching him. When he gets back, I'll say, did you see Bobby waving at you from across the street? Microsoft 162 and change. I need to get that high-low ticker back up. Yeah, I'm just watching JBug to see what we're going to do. Try to get a sense of what is happening today. Right now, kind of a trend line here on the 1 minute. See, this is so far the bottom today to around 290, 442 was low a day. Sitting right at the 200. If it gives up the 200, we may see some acceleration to the downside. If you trend up from 288.06, we broke it to the downside. Look at how ugly this 15-minute chart is. We actually just filled a gap, pre-market gap, this morning. So we had that drop, filled the pre-market gap, and now 15-minute looks like continuation to the downside. But we'll see. Kind of had this, see this trend line here on the 15-minute. Looks something like that. Kind of a parallel channel there. Kind of like that.
It's like I'm sitting here looking at SPY, strongly consider dumping and flipping.
Well, I don't know if did you see the parallel channel I just drew on the 15-minute?
I don't have the little
Okay.
thingy yet.
We're at the top of it. Just something to keep in mind. That we've been in this, entered this 20 Feb. When we fell out of it, we came right back into it. Now we're at the near the top of it. Take a look at the hourly for SPY. You have it being supported by a trend line. Well, this is the 1 hour chart right here. And BB, I was talking earlier that these purple lines here, longer term support. Good morning, Forex. Yes, I'm back. Bobby, I'm not sure exactly what you're looking at. I see this trend line here on the 1 minute, but I've also got it hitting its head right up here at the 200.
So if I see SPY reversing, I pulled up the 304's Wednesday expiration is what I'm going to jump into if I feel like there's a reversal or move to the upside.
Well, so far, this trend line on the 1 minute holding true. Coming up on potentially the third bounce on this trend line, on the 1 minute trend line on the downside. See if that holds.
Again, it hasn't broken below the 89 on the 1 minute at all today.
Yes, Bobby, sorry, that's what I meant.
There's just, it's like SPY flow today is, puts to calls has just been absurdly in the direction of puts.
Yeah.
But I'm not good enough to read it to understand what's bullish or bearish.
Let's go take a look. Yeah, I don't know that I can deduce either which direction. It looks like more indecision.
Okay, so can we speak broad terms, Bender?
Sure.
Okay, so if this were indeed what we're looking at as a rally reversal at this point in the day, based on Friday going into overnight, we're still operating in a bearish mode as far as the price action, correct?
Yeah, I mean, the only thing that I'm seeing, yeah, still bearish direction. I mean, it's still we in order to break out of that, I think we need to be back above 300. Just because this channel that I have here on the 5 minute, in order to break through that, get out of it, at least 298 and change, just to show that we're breaking out of that.
If I look at the ES and I expand these things out, it's like this looks more like a bear flag on the 1 hour and 5 hour than it does.
Yeah.
No, I'm sorry, the 1 hour than it does anything else.
And that's what I see as well.
There's no V reversal. There's no V reversal. There's nothing as far as, sustained momentum. There's no major buying the dip. It's like, okay, we'll get a taste, but we'll get a taste. We'll take some profit on our shorts, but we're not ready to let it run.
Yeah. Yeah. And I don't see that changing until they come out and say, okay, we have a plan and we've figured out what we're going to do about this, and we've started and it's working. Right now, the high day ticker lit up. On CNBC, they're asking people to not panic and overreact in the market. Let's see. Kickstart. Yeah, I agree. And we were talking about this earlier. We were experiencing some of the same stuff last week where it was like the big moves being made after hours, and then during the day, a couple hours of just these back and forth swings. And if that, if we're looking for that to continue to play out, I was scalping the futures last week on those just kind of back and forth because we'd get, a pop and then just no follow through, no continuation. It just stop and reverse directions. But let's see. Do see SPY moving up a little bit here with some volume.
Me too.
Starbucks high day ticker. Guild high a day. What's Guild at? $71.90. Guild looking like it wants to make a run. If there was anything to be bullish on in this market, that one could be interesting just because of all the attention it's getting, right? Let's look at this on a daily. Guild is up 3.73%. Unwilling full. Draw some fibs here on this. So Hells with the theme park closures and people not wanting to hang out in highly populated areas, crowded places. How far do we think Disney can go?
Disney has that double edge because Disney also has cruise lines.
Yep.
They have theme parks, but they also have media. Media is going to perform really, really well, but I don't know if it's enough to counterbalance the hits that they're going to take on the other side.
Yep.
I'm not a big Disney watcher. Disney is one that I would stay away from as far as trying to hit and focus more on, finding an opportunity to get in when it stops bleeding.
Yeah, and that's why I was asking, is because it's a stock that it's another one of those that I want to own it, put it away, and sit on it long term.
I did look at the 103 to 105 area on Disney, where I would just be scooping up with both hands.
Yeah, I can see that. Yeah, I could see starting to pick it up at 105 and keep adding down to, if it does 95 or lower, you can see 90, was that about 90.75-ish? You would expect $90 to hold.
I agree. That's my plan for Disney.
Yeah.
And if it never gets there, it never gets there. Cool.
Yep.
About to go red on these puts, so what shall I do?
All right, Apple 284. I'm going to go back to SPY. Oh, Apple. I had an alert set up there for 284.29 and it just crossed it. And SPY now looking to break out of this descending channel. Broke out of this little wedge on the 1 minute to the upside. Now I would be considering, we get another candle close above this, and I would be considering long with a tight stop. Because it's probably still going to be short-lived. Who knows, but who is speaking live on YouTube? Thank you.
If these puts were longer dated, I would, this wouldn't bother me at all.
Yeah, definitely.
But I've got a short leash. That's definitely my mistake for being cheap and up on this batch. You pay.
World Health Organization just said that in the last week, cases outside of China were 9 times higher. I'm just listening to CNBC in the background. Catching bits and pieces. Let's see. Unwilling Fool says, I'm looking to buy a hefty position in a company I just discovered, ticker MIC. I don't know anything about them. Never heard of her. Macquarie Infrastructure Corp. End of February, ER. Q4 earnings and revenue miss estimates. Since 2018, this 3750-ish has been pretty solid support. Has a gap to fill, needs to get over this 48 or so. And then it's got a gap up into the 60s. That could be interesting. And a 10% dividend. I don't know enough about their prospects and whatnot. What's going to push them up? I don't have any idea. Is this, what exchange is this on? Apple to pay up to $500 million to settle U.S. lawsuit over slow iPhones. Apple will pay consumers $25 per iPhone. with a minimum total payout of $310 million.
That per iPhone that you've owned through the years or no?
I don't, let's see, it covers iPhone 6, 6 Plus, 6X, so 6th and 7th generation. And Apple attributed the problems mainly to temperature changes, high usage, and other issues. And SPY getting a little perky. And ComScore ranks Meredith Corporation. You guys know I follow MDP. A digital #1 lifestyle property, ahead of all lifestyle competitors, surpassing 1 billion monthly page views. Their flagship properties include People, Better Homes and Gardens, All Recipes, and Entertainment Weekly. Nothing that I would ever read, but, you know. What's that, Hells?
He's had a huge dark pool print on SPY.
Got your calls up?
No, I just sit there and let him run $1 on me instead of buying like a donkey. It's like it's difficult at this point because I'm wanting it to get above. I want the ES above 3005 in order to take it long, because otherwise it's still in a bear flag.
Yep. Matt, are the purple lines drawn automatically? The purple lines I draw. SPY did break above that 5-minute opening range.
We're right about at that same point in time last night when Ron DeSantis declared a state of emergency or whatever, a health crisis in Florida. That's what stopped the upward momentum last night on futures.
All right.
Like you could just see to the second where it just stopped dead in its tracks. So we're there now. A pull, but man, it's got a really.
I'm looking at the 302s is what I have pulled up. I haven't done anything on them yet, but
I could have had the 04s for 210. They're 308 right now. I just sat there watch them run.
What expiration?
Wednesday.
Gotcha.
No, is that Wednesday? Yeah, that's Wednesday.
Those 302s are moving fast. Since I've been watching them, just in the last 2 minutes, they've jumped 20 cents. $1.28 by $1.30. Now they're $1.35.
I'm not going to go long now. I'm going to go ahead and take my medicine however it comes at this point.
Yeah.
At least until I get a Europe close.
Which is what, in 30 minutes?
30,
35.
45 minutes, somewhere in there.
Yeah. No, Bobby. Nothing new.
It's really, really mismanaged the trade this morning. Okay, so how do I take it? How do we take advantage of this, vendor? Should we be looking at longer dated YOLOs to the downside? Should we be looking at that with this pop?
Yeah. If I have a hard time, with longer dated short positions because any good news, the market is looking for any good news as it relates to coronavirus, and I think one thing that comes out that says that, okay, we've got it under control and here's how, and I think the bull market continues. But I don't know.
Okay, so for the longer term, I'm pulling up the May 15th 250s.
There you go. On the 15-minute chart on SPY, my indicators are starting to turn to the upside here. Looking like we may cross this signal line if you guys see this indicator here. Then it could get interesting. Want to see if we can get over 300. It touched it, 300.06. It didn't stay up there, though. Analysts say that Apple's stock has hit bottom and it's time to buy. From Barron's. So of course they do.
people of Venezuela unbelievably badly. They don't have water, they don't have food, they don't have anything. And we are talking about that. That's a big topic of discussion. Yes, Jim?
Mr. President, if I may add something to that, it's very important that we are stronger on sanctions.
Unwilling full contracts are acting weird because the VIX is high.
All the healthcare
There's a lot of volatility priced into the contracts.
work together jointly, so there's a political and democratic transition that is effective in Venezuela.
This meeting was set up before, and that was about drug pricing. This meeting was set up a long time ago with the pharmaceutical companies, and that meeting was about drug pricing because we brought the numbers down last year. First time in 51 years that the drug prices prescription have come down. And I have a meeting scheduled on drug prices, but now we're going to make another subject, and that'll be probably the first subject, and that is to do with the vaccine. How are they doing? That's what we're going to find out. We'll know that. Well, we've asked them to accelerate whatever they're doing in terms of a vaccine. Absolutely. These were set up a long time ago, and others are. I mean, you could ask that to the Democrats because they're having a lot of rallies. They're all having rallies. That's what they're doing. They're campaigning. I think it's very safe. Yeah. I think it's very safe. Well, we're going to find out, but we're getting out.
Grab one of those May 15th puts.
The Taliban.
The 250? Is
We are going to be leaving, and we're going to be bringing our.
that what you ended up going with?
For almost 20 years. It's a long time. We've done a great job in terms of getting rid of terrorists. Now it's up to other countries to get rid of those terrorists.
Can you hear me, Hels?
Well, we're going to meet. We have discussions.
100%.
Okay, cool. Just making sure.
Thank you. Thank you all very much.
Mr. President, ahead of a meeting this afternoon with CEOs from pharmaceutical companies, maybe giving just a peek. We might expect to hear when that happens around 3 o'clock Eastern Time. With that, stocks are close to session highs. Eamon Javers, maybe you can tell us a little bit more about what we think.
Omar, did you see that? I pulled it up, but you were asking about the VIX chart. I mean, if you look at this, like look at a 4-hour. It was all the way down here at 1350. 1170 you can see back in January. Now we're up at 37.
Of the degree to which we just don't know what the impact of this virus is going to be on sort of American life in 2020, given that, as he points out, Democrats are holding large rallies, he's holding large rallies around the country. If those rallies are deemed to be unsafe, and the president says they're safe now, that really affects the primary season on the Democratic side. It affects the president's ability to campaign in 2020. You just wonder, and it's sort of a big unknown X factor, how that would affect the presidential election going into the fall.
Eamon, good point. And we'll be hearing from you a lot more this afternoon. Eamon Javers at the White House on another busy Monday. And good Monday morning. It is just after 11 a.m. at GE headquarters in Boston. It's after 11 a.m. on Wall Street, and Squawk Alley is live.
All right, guys, I'll be right back. I'm just going to go refill my coffee.
Good Monday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with John Ford here at Post 9 of the New York Stock Exchange. We're watching this attempted stock stabilization here on some headlines out of the World Health Organization and G7 finance ministers. Fundamentals, uncertainty, volatility. Traders are turning to the internals for signs of some exhaustion. But are those signals reliable in this crisis? Bob Pisani's got that on the floor. Bob?
And Carl, it's comforting we're getting a bounce today because at Friday the internals screamed by. We just don't know whether they're accurate signals or not, and that's why we've got this deer in the headlight looks in the markets. Take a look here. I'll show you some indicators here. This is a relative strength index, just 14 days. It shows you how the market is moving up or down in terms of momentum in the last couple of weeks. Look at this huge drop here. This is below 30 is considered oversold. Below 20, you almost never see that with a major index. So that's a screaming buy right there. If you look at some other things,
All right.
index we've been talking about hit 49 the other day. Look at that. Now this is going back 20 years. This is a very, very rare event. Yeah, back here we were up close to it. Look at this. We hit 80 back at the financial crisis. That is a once in a lifetime event. But when you get towards 50, that very rarely happens.
Hells, I'm gonna have to go back to main chat. I know we've got, I think, 3 moderators that are out today.
And that's fine. I'll come back over there with you.
Yeah, I'll probably come back here later in the day.
All right, man.
I'll shoot you a note when I do. Let's go listen to the shit show. That is the market. Not the black box shit show. The market shit show.
Amazon.
Throughout the course of the hour. We do want to turn back to the passing of former GE Chairman and CEO Jack Welch, former GE Vice Chairman and former NBC CEO Bob Wright joins us on the phone this morning. Bob, it's good to talk to you on what's a tough day for a lot of Jack's friends. Thanks for the time today.
Thank you for allowing me to come on, Carl.
Just share some reflections, I wonder. I mean, it's hard to imagine a manager who knew Jack better. What thoughts are you having about him today?
Well, I worked for him for 20 years. He was demanding, exciting, a brilliant strategist, and a man of the highest level of energy. He clearly was one of the best CEOs of his time. I'd also mention that the last few years have been very rough for him, but he didn't complain, and he tried to work through every medical setback, small or large. Very difficult.
What do you think's more profound to think about today? His influence on GE itself, or his influence on what we know is a generation of managers who've gone on to run giant companies themselves?
I think it's both. He wanted to make a lot of changes in GE right away, but he didn't feel he could do it in the natural way, sort of slow progress. So he set out to put in big goals, and he tried to get people to do things right away as opposed to wait 2 or 3
Me too, Mateo. It's again volatility. The VIX is high, so there's more volatility built into options contracts than what you would usually see. That's why the pricing is looking different.
they could do this, benefited greatly, and the organization got changed radically. So that was not easy to do in those days.
Bob, it's John Ford. I'm wondering, how do we today translate Jack Welch's legacy into some of the digital challenges, the shifting economy?
Yeah, that's okay.
His approach to leadership and management and continue to make it relevant today. Are there any adjustments that you need to make, even in the way that you treat people?
Yeah, there's a lot of fear, a lot of indecision.
Well, I would say that the things that he wanted us to do, always looking at, he was very interested in technologies. He wanted us to adapt to current
I mean, this is pretty telling right here that we're split between positive and negative alerts, and there's not that many.
hang around the back history. You got to be out in front of it, and that's what he tried to do on everything. A big company, very big company to do that with.
Bob, I know you've written a lot about this in your own memoir, but I'm trying to think of a time early in your career where you realized you were working for someone who was not your run-of-the-mill manager, and then of course his influence in some of the very big early decisions you yourself made when it came to the future of media.
So I met Jack Welch when he was in Pittsfield, Massachusetts, and it just become a kind of a major figure in GE back in the 70s. So I had a chance to observe him right up front, like sitting at the same table with me. And I had left. I had gone to Cox, and I had done some other things, all of which he knew. And so he kind of followed me, but I followed him in terms of his history and what he was doing. But he was always trying to make sure that technology didn't get behind him. He wanted to be up with it, even as hard as that is. So I could say that same thing today. It's like what Amazon has done. Now everybody's following, but everybody's late, and he hated being late to technology.
Bob, as you're talking, there's a picture here, live shot of the exchange where
Nice pop on SPY.
media cubes above the posts, which is just another testament to his influence and the respect people have for him. Thank you, Bob.
Thank you very much. Have a great day, and we will all remember
See if we can get any continuation.
those days because he was such a dynamo. Thank you.
Bob Brett, thanks. Let's get back to this morning's market rally. With us now is Ard Asset Management's head of U.S. equity strategy, Ron Temple. Ron, good morning.
Thank you.
We've just been talking about how the market seems to be expecting a 50 to 75 basis point cut by March. That wouldn't leave a lot of ammo left to deal with future shocks. What message should investors take if the Fed does or doesn't do that?
Well, I think investors need to be careful here about getting too excited about the Fed. What we have here is a supply shock. If you can't go to work because of an infection or because of coronavirus, even if the Fed cuts rates 50 basis points, you still can't go to work. So this is very different from trying to induce demand by lowering interest rates and making it cheaper for people to buy goods and services. So I would just caution, I think it's a nice sign of encouragement from the Fed or other central banks that they say, hey, we're here for you, we're going to do everything we can to prop up demand, but we should recognize the limitations of Fed policy.
What's your reaction to the extreme volatility that we've seen? I mean, even before the market opened this morning, last night we were down, then we were up, then we were down, then we were up again. We got near the flat line on the Dow, below it a couple times in the S&P. Now we're pretty much at session highs.
So my take is we're still in the early days of the coronavirus story. I mean, effectively, there's a lot we don't know.
J-Bug, I'm playing futures.
We think it might be as long as 14 days before a patient shows symptoms, but there's been speculation that maybe it's as long as 24 days. We don't know infection rates. We don't know the case fatality rate when you get infected, how likely are you to die. We probably are underdiagnosing this by a large magnitude, which means we're probably overstating the death rates. You divide the number of deaths by the wrong number, you get the wrong ratio. And I think we also just have to recognize 3 months ago this disease in theory didn't exist. So mass producing testing kits is really difficult at this point. So I think there's a lot more to unfold. I think we're going to find out a lot more.
Right now, upside
The age is the economic impact.
with a tight stop.
Is it in China? But even there, it's very difficult. But what we don't know is how people will respond from a behavioral psychology perspective and whether they stop going to the shopping malls or stop going out to public events.
As you're talking, reclaimed S&P 3K, important psychological level. We'll watch that. The VIX is down to 36. We do have some macro desks, though, basically calling for flat GDP growth in the second and third quarter. To the degree we get rallies, how much of them are going to be ephemeral because we haven't been able to reset the revenue rate out of Q1?
I'm watching Amazon's move here.
I definitely think you could argue in the short term the market that was oversold, but I think it's too early to say we can call a bottom. The way I'm looking at this volatility is it's
God, those contracts are just expensive.
So if there were some companies you really wanted to own for the last year, but they just kept getting more expensive, some of them are on sale, right? You got a 20-25% discount in some of these stocks in the last
where you might be getting an opportunity to rotate out of something else in the market. So I'm looking at this as a rotation opportunity rather than this is your chance to back up the truck and load your cash into the market.
Well, I'm wondering whether that drop that we saw last week, and hate to talk about it too much in past tense because anything can happen at any minute here, but was that a panic or was it a sobering up, right? Because valuations were generally, in the market pretty high already. So should investors, when we think about things getting back to normal, is this level more back to normal or is where we were more back to normal?
I think it was more of a sobering up. I think the market had gotten a little ahead of itself. Valuations were stretched in a number of sectors, and the market had been ignoring coronavirus for weeks, right? So we saw this happening, and as long as it was confined to China, people seemed to be willing to ignore it and say it's a problem in China. Well, the reality is China's 17%.
SPY over 301.
What's happening in China, and it really took it spreading into Europe for people to actually have kind of that come-to moment and saying this is really important. So I do think it's actually the right adjustment for the market. Maybe it happened really abruptly. It was violent. But I do think that people had to start paying attention, and we finally did.
Does it change the way an investor, a global investor, should think about relative value in the U.S.?
I think this is one of those things where it's hard to make a broad generalization. I think this is just an opportunity to come back and look at the fundamentals of each individual company. So the way I'm looking at it is this exposes some of those companies that are highly levered, where you're waiting for cash flow, hopefully 5 to 10 years from now. If the risk of recession has gone up materially, those companies don't do particularly well, whereas some of the other companies with strong balance sheets, talented management, and ability to compound earnings and capital over time have basically
So it's a boom for value. I mean, that long-awaited value.
I think value versus growth. I think it's basically an opportunity to buy higher quality companies at a lower price. If anything, actually, value has underperformed growth in the last couple of weeks. And I think if you think about that, a lot of the value stocks tend to be more cyclical. You've got your financials, materials, industrials. If you're actually having an increased risk of recession, those stocks are more susceptible.
Are you taking a harder look at balance sheets now?
We always look at balance sheets, so I think we're always focused on the balance sheets and fundamental. But I think you have
See this sentiment crossing here on the 15-minute on SPY.
reversals as the U.S. 10-year Treasury got toward 1%. Greek 10-year yields 2 weeks ago were 90 basis points. Now they're at 140 basis points. So the market definitely is recalibrating risk and repricing risk right now.
This started in China, where a lot of the goods that are made are relatively easy to count. They're coming out on shipping containers. You can see whether they continue to do that or not. We hope, of course, that this doesn't have a major spread in the U.S. But if it does, how would you advise investors to think about the supply of knowledge goods, software that maybe isn't getting coded or checked, people who aren't able to be as efficient as they might have been because perhaps they're working remotely in teams that work better together? Is that something investors should even consider, or do we have to wait for earnings reports and things like that many months down the line to start to get a handle on it?
I think what you're highlighting there are some of the really tough factors to try to quantify, right? I mean, how much time are people spending in the office talking about coronavirus instead of doing their job, right? Even if you can get to work, there's definitely been a productivity degradation from this situation. And I do think you're right that there will be issues of people who are working from home perhaps being less productive. That's largely on the margin, but I'm
Tick plus 1254.
And so if you think about the most susceptible people or vulnerable people in an economy, it's usually those hourly workers where many of us aren't going to the office and we're telecommuting.
I'm looking at an Amazon 1920 or 2020 for next week. If I was going to play anything, that one could be interesting. If I was going to play long, I just don't know that I'm.
And I think that demand disruption is actually very real. And we're definitely seeing that in China, by the way, where I think if you look at the Baidu migration index, only 58% of the people from tier 1 and tier 2 cities who left for Lunar New Year have returned home. I mean, this is an incredible hit to demand. And, you read the articles about the local noodle shops where they're trying to figure out how to keep the business afloat.
And have a month's cash at best.
Exactly. It's a very tough environment for small business and for companies with more leverage, less cash. And so I do think we have to think about all those ramifications for the economy and for security selection.
Really illuminating on real and potential impact. Ron Temple, thank you.
Thank you.
Dow's at 540. In case you need reminding, this would be the first up day in 8. Just a sign of how tough a week it has been. Let's get a check on the big movers. Who's getting hardest hit today and who's holding up better than expected. Dom Chu has that. Hey, Dom.
All right, so Carl, just listening to the conversation you guys were just having with regard to the market moves, you'll see here that consumer staples, the best performing sector, in a day when every sector is up on the move. So take a look at this, though. When it comes to individual movers, some of the most directly impacted by the coronavirus have been those stocks that in travel and leisure. So among some of the underperformers, despite the fact that the markets are solidly in the green today, you've got Norwegian Cruise Lines, also Carnival Cruises, airlines that are going to be severely impacted, American and United, all of those really lagging the market despite the fact you got a 500-plus point gain on the Dow so far. As for some of the consumer staples that we just mentioned, a top-performing sector so far today, check out what's happening with Costco. There's been anecdotal reports of huge jumps in traffic at Costco over the weekend as people look to stock up on items. The analysts over at Oppenheimer now say that could make a material bump for same-store sales growth at some of those locations. Costco shares up by about 8% at this stage. And then Clorox and Colgate-Palmolive, two of the consumer staple stocks that have been a
Cost is looking good. Unwilling full. I just don't know. I mean, that's, right now it's looking good for the week, but we're still, one headline away from. So Costco does have earnings this week. Making those contracts pretty expensive. I think that's the concern. I don't think anybody knows. We're still one headline away. Oh, somebody's at my door. I will be right back. False alarm. Wife got the door. Got your 10% for the day. I'm just moving my stops up. J-Bug. So when I get stopped out, then I'm out.
indices, Dow, S&P, NASDAQ, all up more than 2%. Dow leading the three, up 2.25. When you talk about buying stocks now, you had held off, even been selling when the market was higher. What's your filter, especially considering that we're heading into the uncertainty of an election season? Well, there is uncertainty, and so I am buying stocks with high dividends, with that good yield, so that if even if they decline in price, they will eventually come back, and in the meantime, you can earn 4 or 5%, and even higher on the stocks that I am buying, and so that's better than zero in cash. Eventually, they will be higher, even if they go lower. Taking that long view, appreciate that. Thanks for being with us. Yeah. All right, so we're going to get Europe's close in just a few moments here. S&P 3012. Let's get to Sima Modi.
All right, we got Europe's close coming up here in just a few minutes. So we may see another little pop.
Thanks for that. Let's get a news update for that. We'll turn back to Super Rare at HQ. Good morning, sir.
Good morning, everybody. Here's what's happening at this hour. The U.S. Supreme Court agreeing to hear a legal challenge to Obamacare in its term that begins in October. That means the Affordable Care Act will continue for at least another year. A decision on that case could be handed down by June of next year. In Paris, the Louvre staying closed for a second day due to coronavirus concerns.
They keep recycling this Gilead news, buying FTSV for $4.9 billion. Keep seeing that come across.
And researchers say that they are a step closer to diagnosing Alzheimer's disease with a blood test. Scientists found certain protein levels were 3.5 times higher among confirmed Alzheimer's patients than their healthy peers. The test also is able to distinguish between Alzheimer's, mild cognitive impairment, and a form of dementia which is often misdiagnosed as Alzheimer's. So some progress being made on that front. You are up to date. That's the news update this hour. John, I'll send it back downtown to you.
So thank you. And as we head to break, let's take a look at the biggest leaders on the S&P this morning. Costco, Twitter, Walmart, Clorox, Apple, and they are gaining big. Costco's up more than 8%, Apple up nearly 6%. A lot more Squawk Out still ahead.
What happens on the bike is what you commit to.
What's up, Peloton family? Welcome to this 20-minute pop ride.
To the hills,
Don't stop here, Peloton. Remember what we started.
the sprints,
We've got this together. We are always a team.
and the milestones.
Right now, Peloton, wait to show up today.
But what happens off the bike
My dad just ran his fastest 10K yet.
is why it matters. Try it for yourself with 30-day home trial. Visit onepeloton.com to learn more.
Mom, delivery.
You've been loading up on
40% off select bath vanities, faucets, toilets, and more, including a style selections 30-inch brown single sink vanity.
Hey Mel, let me know if at lunchtime you want me to hop on and see if I can help you.
Starting at just $248 per square foot. Get it installed for just 99 cents per square foot. And you also purchase Pergo Gold underlayment exclusive to Lowe's. Do it right for less. Start with Lowe's. Bath Upper Belt 348. Flooring Office Belt 325. See store for details.
Yeah, ping me. No problem.
Lost your team the championship. What are your thoughts?
I switched to Boost Mobile and got 4 free Samsung Galaxy A20 phones. So even when we lose, I still win.
Isaac, the fans are burning your jersey.
Yup, the fans get it. My Boost Mobile network is en fuego.
Switch to Boost Mobile and get 4 lines for $25 per line per month with unlimited data and 4 free Samsung Galaxy A20 phones, all on our super reliable, super fast network. Step up with Boost Mobile. New customers apply for line. Additional restrictions apply. See boostmobile.com for details.
You love iced tea. It's smooth and refreshing with just the right flavor. You also love to unwind. That's why Twisted Tea iced tea is everything you love, because it's made with real brewed tea and a kick. Twisted Tea. Unwind with a twist. Drink responsibly.
Your home is important. That's why Geico helps make it easy to save on homeowners insurance. Because home is more than just a place. Home is where you build a giant pillow fort in your living room. And when people ask
All right, I got a small position in cost in 330s for this week.
Chocolate Lab and leave a web of lies that's almost as intriguing.
Hoping that the fact that they have ER coming up, even if we see a pullback, hoping that will help them. In my swing trade and account holding space, I think space it's space. I mean, it's a total speculation play. I think if you hold space, it's one of those that you probably just hold it and don't look back. I mean, that's what I'm doing with the shares that I have. Is I plan on holding those for a while. But I was able to pick up some. I was looking for that dip, and I was able to pick some up pretty cheap.
Virus data, and we're all experts on the economic side rather than the medical side. But I would say
JBug like 23.
developing in a major city, whether it be in Western Europe or in the US, is going to get this market pretty riled up, and risk is going to take a knock. So I think we're going to have confidence.
I was going to bring them up this morning because I think, didn't they move their lockup expiration? Isn't it today? I thought so. Could be wrong on that. Yeah, I could be wrong on that. But for some reason, I had today in my head. If it was indeed today, and it didn't get a huge drop, that may, it's highly shorted. So there are bears out there that may be short, thinking that, lockup expiration, it's going to dump. If it doesn't dump, that may trigger some covering. Don't know. Again, I haven't confirmed that the lockup expiration was indeed today or is today. I'm not sure. JBug, that's one of those that I said I wanted to dip so that I can get back in cheaper because I had sold some up in the 30s. And it's that saying everybody wants a dip and then so they can buy, and then when the dip comes, do they actually buy? And I looked at it and said, yeah, I'm going to buy some down here and hold on to them. Not worried about if it dropped further. Coronavirus update. Coronavirus. I got a call coming in. 1 sec. Hello? Spam.
Certainly the flu in this country, the mortality rate's about 10 basis points. And if this virus were to be maybe in 50 basis points, 40 basis points eventually, that maybe not life back to normal, but people would maybe the fear would be taken away. I think that would be instrumental for markets to find some sort of basing in here. And I think a vaccination, all these types of things, or even the
Thanks for the follow. Welcome.
effectively would also be welcomed by markets. These are things that are out the windshield. We don't know how far.
Yeah, Whaler, I think that was the original, but they moved it up.
And history also says that these types of drawdowns in markets do eventually turn out to be buying opportunities if you're looking 12 to 18 months out.
With all the caveats that we just said, I mean, no one knows how this is going to go, how long it's going to take for us to get a sense of safety again. You think rates markets are overplaying their likelihood of a recession?
I didn't necessarily think so. I think there's a bit of a binomial distribution here. Things could turn out a little bit better, but things could certainly turn out a lot worse. I think there is a lot priced in the short
J-Bug, I don't do that.
pricing in roughly 50 basis points for the next meeting. The Fed is very unlikely to do more than that. So I think that's a max. Possibly, really. I think given how few bullets they have, I think they prefer to be doing 20
I have enough accounts I have to manage.
in the market in terms of timing. You look at all the other central banks, RBA, Bank of Canada, as well as this week, there's actually more than 25 basis points priced in for those central banks as well. I can't see them doing more than 25 basis points. Again, because most of the central banks don't have much to play with there.
Of all the statements we've gotten from Kuroda, Lagarde, Powell on Friday, did one surprise you? Either in its relative dovishness or hawkishness compared to your expectations?
No, I think that was exactly what was expected, or should have been expected. I think the G7 finance comment that we should get tomorrow will say that they're prepared to act. That's entirely, a standard playbook in my opinion. Then I think it's just exceeding the market expectations, which is going to be so difficult.
Jeff, you say one of the things you're watching is consumer confidence in this environment.
Yep.
What do you think's the key to that?
I think
SPY almost at 302. Amazon 1918. High a day 1920. 99.
So I think the more the consumers can feel that our governments are in control, that this is not going to spread wildly around the country, will be beneficial to consumers. Certainly, right now, we're in the midst of a supply shock than we do a demand shock, but we are monitoring that extremely closely. And consumer confidence, which again is tied very highly correlations to retail sales, is something that we have to keep an eye on here as this plays itself out.
Yeah, and the major indices still at or near.
Another pop coming in on SPY.
Alan, Jeff, thank you. Still a lot more to come on today's attempt at stabilization. We call it a rally of 600, I guess we can. Rick Santelli, what are you watching?
I'm watching the most recent grouping of data points is very solid, but I know we have to go through a couple of more sets of data points before we really get a GPS on the economy. That's what we're going to talk about.
What happens on the bike is what you commit to. To the hills.
So maybe it's already happened, Whaler. I couldn't find. I had a hard time finding any solid, concrete dates.
But what happens off the bike
My dad just ran his fastest 10K yet. I've never seen him so sure of himself.
is why it matters. Try it for yourself with 30-day home trial. Visit onepeloton.com to learn more. Capital One knows life doesn't alert you about your credit card.
Next stop, Brown Street. And riding the khaki shorts. Your G&L energy bill went up 60% this month. Seems like you want to know. Stand clear of both doors.
So, meet Eno, the Capital One assistant that catches things that might look wrong, like increases to a recurring bill, then sends an alert to your phone and helps you fix it. Eno, another way Capital One is fighting for your money when you're not. Capital One, what's in your wallet? See CapitalOne.com for details. Conditions apply. Refreshing bath updates start with Lowe's Bath Savings Event. Now get up to 40% off select bath vanities, faucets, toilets, and more, including Style Selections 30-inch brown single-sink vanity.
So maybe that's part of the move is that lockup happened and the shorts said, oh, well, it didn't crash. And now it's moving back up. 30 has been tough to clear. Look at Apple, $291.
Isaac, you missed the winning track and cost your team the championship. What are your thoughts?
I switched to Boost Mobile and got 4 free Samsung Galaxy A20 phones. So even when we lose, I still win.
Isaac, the fans are burning your jersey.
Yep, the fans get it. My Boost Mobile network is en fuego.
Switch to Boost Mobile and get 4 lines for $25 per line per month with unlimited data and 4 free Samsung Galaxy A20 phones, all on our super reliable, super fast network. Step up with Boost Mobile. Free phone limited to new customers at 10 per line. Additional restrictions apply. See boostmobile.com for details.
Geico presents, oh boy, another voicemail from your roommate.
Hey, I got some bad news. Someone broke into our apartment and they took your TV and your computer. But what's most upsetting is they took my water bottle. Oh wait, there it is. I was really worried for a second. Oh, they took your stereo too.
The Geico Insurance Agency could help keep your personal property protected, like if your roommate is only worried about her $2 aluminum water bottle. Visit geico.com to see how easy it is to switch and save on renter's insurance.
Dow up 626, Apple up almost 7%. Let's get the Santelli exchange. Hey, Rick.
Good morning, Carl. You know, this is going to be a tough one because in many ways, people are asking questions like, is this going to be an L bottom, a U bottom, a V bottom? There's no doubt in my mind that there's going to be a V bottom. It's just a question of exactly what is the catalyst.
Yeah, that is certainly a possibility as far as it, the coronavirus being. I think that possibility exists. I try not to think too much into the conspiracy theories and whatnot and just kind of play the chart. But I think that the possibility exists.
Are going to be affected. So the data we see that is going to be ongoing for a while is really somewhat tainted. It shows us an accurate picture of the economy before the virus. And that's the point. Because now we have to go through 2 more cycles. So we not only need to be prepared for the psychological issues of the information coming out from coronavirus, but also this long runway before we can really sink our teeth into something we feel good about our investment. The next set of data points is going to show the desperation we've been living through the last week and a half or so. And there's no doubt, as we've seen in some of the Chinese data, because they were hit first, it is going to show some big dings. But that's what the market's been pricing. It's aware of that. Then we have to begin the cycle where the coronavirus effects start to retreat a bit. And therein lies where I think we get the right side of that V. We've had days where we're down 1,000. We may have a day today where we're up 1,000. But I do envision many days where we're up a lot, like last week in reverse, just because we are going to be comping that second set of data points to some very weak comps. The next cycle is going to be weak, and the cycle after that.
Correct. Kickstart. As the VIX drops, some of that volatility premium, implied volatility, comes out of those contracts.
I've always thought the markets are like children. They throw hissy fits. They're very binary. They want what they want now. Think about all these calls for 50. Right now, this morning, here we are up 600. Have you seen any or heard any 50s anywhere around the globe? The point is, central banks get knee-jerked into this. We look for some kind of feel-good feeling from central banks. But at the end of the day, it's not what makes us feel good. It's what makes the economies healthy. John, back to you.
Point taken, Rick. Markets come at you fast, indeed. And as we head to break, take a look at today's biggest gainers on the NASDAQ. Speaking of, JD.com, the Chinese e-commerce and logistics supplier, leading the pack. Costco, Tesla, Apple, Western Digital, among them. We're going to have the latest on this morning's volatile trade straight ahead.
It all starts with an invitation.
Nice to see Peloton moving up finally.
No detail is too small. You feel like a special guest. It starts as an invitation to drive a Lexus vehicle, but it becomes an exceptional experience. The invitation to Lexus sales event. Your invitation is always open, but the offers only last through March 31st. Click the banner to discover more. Experience amazing at your Lexus dealer.
You've been loading up on things from Walmart.
Exclusions apply. Capital One USA NA.
Refreshing bath updates start with Lowe's Bath Savings Event. Now get up to 40% off select bath vanities, faucets, toilets, and more, including a style selections, 30-inch brown single sink.
Hey, what's up, John? Yeah, last week was a crazy busy week. I couldn't stream last. I just had too much going on.
You also purchase Pergo Gold underlayment exclusive to Lowe's. Do it right for less. Start with Lowe's. Bath upper belt through 4H. Floor mat is valid through 325. See store for details on this only.
At Farmers Insurance, we know a thing or two because we've seen a thing or two. And we know that it can get a little weird when things just don't work together.
Yeah,
Farmers lets you bundle
John, that was from a while ago.
together. And doesn't that sound nice? Bundle with Farmers today and you can save an average of 20% too. Talk about music to your ears. Call 1-800-FARMERS to get a quote today.
Isaac, you missed the winning dunk and cost your team the championship. What's your thoughts?
I switched to Boost Mobile and got 4 free
I haven't even looked at it today. What's it doing today?
when we lose, I still win.
Isaac, the fans are burning your jersey.
Same
Fans get it. My Boost Mobile network is everywhere.
same kind of action it's been doing.
Get 4 lines for $25 per line per month with unlimited data and 4 free Samsung Galaxy A20 phones, all on our super reliable, super fast network. Step up with Boost Mobile. Free phone limited to new customers of line for line. Additional restrictions apply. See boostmobile.com for details.
Seattle is the home of major tech giants, as you know, like Amazon and Microsoft. It's also the site of the first coronavirus deaths here in the United States. Scott Cohn is there live for us today with how that community is being impacted. Morning, Scott.
Good morning, Carl. The second death in the U.S. and the second in this area announced last night. It was a 70-year-old man who was a resident of this nursing home in Kirkland, Washington, and this place has been the subject of so much of the activity and the concern. 6 of Washington State's 13 confirmed cases of COVID-19.
Nice.
Another 50+
On Clorox.
exhibiting symptoms, and statewide now about 260 people are being monitored for potential
Yeah, I'm not
symptoms.
buying Commons at Tesla yet.
All of this is considerable. Just here in Kirkland, 25 of the firefighters that may have come into contact with residents here have self-quarantined since this weekend. That's a quarter of the fire department here in Kirkland, Washington. And then it goes beyond that. Schools have been closed, and companies are also limiting non-essential travel. Remember, this area is home to some of the most important companies in the world. Names that you know, like Microsoft, Amazon, Starbucks, Alaska Airlines, and F5 Networks, which has closed its tower in downtown Seattle for the day. This was out of an abundance of caution, according to a spokesman who tells me that one of the employees believed he
Look at APT down at 1345.
that employee has tested negative, but just out of caution, they are completely disinfecting the tower, and they expect that they will have people back tomorrow. The company also postponed an hours meeting that had been scheduled for this week. And then beyond that, tourism in Seattle is a $7.8 billion industry so far. Events
CMCSA high a day. A lot of stuff hitting the high a day ticker, obviously.
conference, Emerald City Comic-Con, which is scheduled to begin on March 12th with 25,000 people. They do expect that that will go on as scheduled. So here's where we stand. The state of emergency declared by Governor Jay Inslee. We expect to hear more from him later today about what they are doing to respond to all of this. It is a mixture of containment of the virus, but also prevention, reminding people about the basic hygiene that we keep on talking about and hearing about, including things like washing hands, limiting non-essential travel, and things like that. And we, of course, are keeping a close eye on the business community here in Seattle and all of these ripple effects as they continue to try and adjust to what may very well be a new normal, at least for now, guys.
Indeed, Scott. Thank you. Our Scott Cohn in Kirkland this morning. It's not just Microsoft and Amazon, though, who are warning on the virus. Our next guest is taking a look at how the outbreak is disrupting all of tech, from conference cancellations to travel restrictions. Mike Isaac of the New York Times joins us along with our own Mike Santoli, who's here at Post 9. Guys, good morning to you both. Mike Isaac, people are now talking about South by Southwest. What do you think the mood is right now among corporate travel managers?
Oh my God, I can't even imagine. Everyone's sort of freaking out. South by actually has been the thing I've been focusing on. I'm supposed to go. A number of other folks in the industry.
Let's see. AVGO ripping, AMD parabolic, strong uptrend. In just a second, we'll go look at AMD. I'm actually surprised. I bought some APT puts last week, and this thing has dropped $7 today, and those puts haven't moved. So I'm getting out of them. Yeah, I mean, AMD is kind of doing what everything else is doing. You can see that where we had resistance back in November last year. That acted as support here for this bounce. Not yet, J-Bug. Let's go SPY. I think, yeah, most of them are shit, but I think that's another industry that if you like it, if you're invested in it, you kind of decide that you're going to buy them and tuck them away and wait for mainstream to accept it. 330, that would be ridiculous, but it could happen. Suppose. If it's in a 401k, I mean, it's up to you, but, in a 401k, I like buying, stocks or ETFs that hold the stocks that I really like, that I think long-term growth potential exists. Futures are ES chart is looking really pretty today. High day ticker is flying. I need to get that back in the stream. I don't even know why it's not there. What happened?
feels when you've saved enough for that long-awaited home edition. Now imagine an edition on that edition. That's the feeling with Capital One, where a new savings account earns an interest rate 5 times the national average. That's right, 5 times, as represented by 5 times more singers. This is banking reimagined. Capital One, what's in your wallet?
Terms apply. Rate comparison based on FDIC national rate. Capital One NA member FDIC.
Celebrate this sizzling Sprint week with amazing savings at your local Sprint store. Now through March 8th, switch to Sprint and get $100 via prepaid MasterCard. That's right, you'll get $100.
Tick positive 1300.
Local Sprint store during sizzling Sprint week. Now through March 8th to learn more. Requires Sport online registration and 45 days of service on a new line before.
They're all different. All platforms are different. I show high 1178 on TradingView, but
And now another edition of Obvious News from Geico. So experts now say that wearing more clothes in the winter will, in fact, help you be warmer. We asked cold victim Trent Patterson about this, and here's what he said.
Yeah, it was the weirdest thing. I was a little cold, put on a sweater, then it wasn't cold. I was like, what?
Also in Obvious News, Geico makes it easy to save money and easy to reach them, with licensed agents available around the clock. So switching is a really smart decision. That's Obvious News from Geico.
Using bias tires, here's your chance to upgrade to Radiant. This spring, Firestone Ag is making it easy. Farm Hard Rewards. Just head to your local certified Firestone Ag tire dealer between now and April 30th and get discounts as big as $200 per tire if you buy 2 or more eligible Firestone Radiant tires.
This deal doesn't last long, so visit Ruby's Gas Tire and Oil to take advantage of Farm Hard Rewards soon. Terms, conditions, and limitations apply. For full details, visit firestoneag.com or contact Ruby's Gas Tire and Oil, Holyoke, to learn more. Girl Scout cookie-inspired flavors are now at Dunkin'. When the spirit of the Girl Scouts meets Dunkin' coffee, it's easy to get a delicious cup of can-do. Thin mints and coconut caramel flavors are here to help you tackle your day. Grab a medium latte or cappuccino for $2 from 2 to 6 p.m. and take on whatever lies ahead. America runs on Dunkin'. The Girl Scouts name, trademark, and all associated trademarks and logotypes, including the Thin Mints mark, are owned by Girl Scouts of the USA. Limited time offer, participation may vary, exclusions apply.
A routine is a good thing to have. And sometimes a routine is a good thing to break. Take a break with McDonald's $1, $2, $3 menu. Get a tasty sausage McMuffin for $1 and add any size coffee or soft drink like Dr. Pepper for $1 more. Because if you don't deserve a morning that's a little easier and a lot tastier, who does? Price and participation may vary. Cannot be combined with combo meal.
Welcome back. Elliott Management wants Jack Dorsey out at Twitter. Julia Forston explains from Los Angeles. Julia.
John, that's right. News that the activist investor is looking to oust Jack Dorsey, sending Twitter to an 8.5%. Paul Singer's Elliott Management is concerned about Dorsey splitting his attention between Twitter and Square and his plan to spend months this year in Africa. That's according to a source close to the situation. Now, that source tells us that Elliott has taken a more than $1 billion stake in Twitter. That's roughly 4% of the company, and has nominated 4 new directors for the board. Now, Twitter and Elliott have no comment, but a source tells me that talks between Twitter and Elliott have been productive. Now, Elliott can target Twitter, unlike Facebook and Snap, because it has only one class of stock, and Dorsey does not have voting control of the company. In between when Dorsey returned as CEO in 2015 and this past Friday, Twitter shares declined by 6%. The stock did plummet more than 20% after reporting disappointing third quarter earnings back in October. The last month it reported its strongest quarterly user growth ever. Evercore weighing in on Elliott's move this morning. The analyst upgrading Twitter to in line from underperform and raising its price target on the stock to $33. The firm predicting that Elliott will either pursue cost cuts at Twitter or could install a CEO that it could increase the probability that Twitter is sold. Now, all of this news comes as Twitter's Dorsey cancels his speech at South by Southwest as the company bans all non-critical travel due to coronavirus. That includes travel to the annual conference in Austin. Guys, back over to you.
All right, even as you said that, Julia, British Airways canceling some flights from the UK to the US to match reduced demand due to the coronavirus, and even some short haul from London to Italy, France, and so forth.
High day ticker still going crazy.
As we await, it's going to be a crazy week between the G7 call tomorrow. ISM services number on Wednesday is going to give us a better sense of how the consumer's responding. Some weeks, Carl, you can guess what's going to happen. Based on last week and the way this started, this is not one of those weeks. Want to call out Apple specifically. It's up nearly 7% this morning, a lot more than the other large cap tech names like, say, a Microsoft, which is up just 4, but Apple also suffered more than others over the past week. Judge has got a big show with Tusa on GE. Let's get to the half.
GE getting some positive press. BYND under 100 after their ER last week. Got Guild 74. And running. Look at Guild just going crazy. I wouldn't be surprised, J-Bug. I still think, like, short-term SPY puts, I think, is tough. EXAS has news. Something about it being covered by Cigna now. There it starts to go. Let's see what kind of move it's going to make.
So last time we were on the show back August 6th was a very similar situation where we said then it's a fluid situation. Whenever you have these type of extreme downside capitulations, you know that a bottom is in hand. You just don't know if it's the bottom. Markets bottom either two ways: a V bottom, or they go back and retest the low. So at this point, the volume we saw on Friday, the indicators we saw, the 3% of the S&P is above its 50-day moving average. Those are capitulatory signals that suggest a bounce should happen. It's just a matter of monitoring the bounce to see whether that's it or whether we're going to come back later down the road and retest.
Josh Brown, what are you watching? You have Apple up better than 6% today. You had a interesting and somewhat provocative tweet that we can show everybody. Here's a test of whether or not you're a certified gangster. Apple's dividend yield and the interest rate on a 10-year U.S. Treasury bond are now identical, 1.17%. You have 20-year money to put to work. Choose your fighter. What do you mean? What's that? Is anyone hearing that? I don't know what that is. All right. I thought that was you. Okay. All right. Let me speak from personal experience. We managed money for 850 households. Last week, we only had one client send an email, sell all my stocks. This was an 8-figure account. Talked him off the ledge within 15 minutes. And then while we were on that call, 3 more calls came in from other clients, which were, how fast can I get money to you? I want to invest more right now. This is what I've been waiting for. So you could take that in 2 ways. You could say that indicates complacency and people still think every bounce is a V. Or you could say people are learning the lessons that most of the time when you go down 5 or 10%, it doesn't mean the market's about to be cut in half. That's actually historically not what usually follows a 5 or 10% pullback, and people are learning that over time. Regardless of how you take that, the big message is, in crazy tapes like this, activity is not always required. You don't have to have the strongest opinion in the room about whether or not we'll see more confirmed cases.
completely shut down for the next 3 months. You can have a view. You don't have to express that with your money. And I think as people become more comfortable with this idea that anything can happen from here, in a very strange, counterintuitive way, it's almost freeing. It allows them to say, okay, I understand that I have no handle on what's about to happen. Is my allocation appropriate for what my long-term goals are? And when we come back to that question, do you buy Apple? Do you not buy Apple? These are tough questions, and you may be wrong, you may be right, but I think having the right allocation, understanding that the range of probabilities is very wide, I do think you get to a better psychological place than if you're the person running around saying, I got to do something and I better not screw this up.
Shannon, what are you advising people to do?
I think as it relates to the tape today, I think I agree. I think we could see, we're certainly going to see some sort of snapback here, whether it's sustained or whether we, test another low over the next couple of weeks. I think it's important to look at what's happening in China. I think it's important to look at the reaction of Chinese stocks to what's happened. They have bottomed and rallied significantly.
AbbVie now over 88.
It seems like we're hitting an inflection point of new cases in China. You look at, to Josh's point, if you look at the manufacturing numbers out of China, they're abysmal. And so to look forward over the next 9 to 12 months and sort of try to extrapolate where you think that means global GDP growth is really difficult. And so if you came into this year and you were feeling like there was going to be a mid-cycle inflection in growth and halfway through the year, you're probably not seeing that. I would say you want to sort of shy away from this value rotation narrative that we came into the year with, and you're probably going back to those quality growth names, which I think is what's going to continue to drive the tape higher here today and over the next couple of days. People going back to those companies that are still continuing to grow on the top line despite what they feel will happen in the economy over the back half of the year.
Pretty remarkable to see Apple up $20.
Did anyone think the Chinese numbers would be non-abysmal? Was anyone like, this is going to look great?
Did anybody think the Chinese government?
Reaction.
Did anybody think the Chinese government wouldn't go to the insurance companies and say, buy stocks, help support this market? Does anybody think that they can do that in the U.S.? No. So as I said in my note this morning, that I like the market in 6 hours, I like it in 6 months. It's in between that I don't know where it is.
Yeah, Mike Santoli, you've been looking over the last 24 hours at the anatomy of a correction, if you will. What do you make of the action?
It's encouraging. I do think you can say it's at least plausible that Friday morning's lows look like they could be, at least on a tactical basis, the low for a little while. But that doesn't mean you can really make a declaration here. I think open-mindedness matters. If somebody came to you and said, Dow's going to be down, 2,600 points in 9 days, you wouldn't think it was necessarily good things going on. That's where we are right now after this bounce. So I think you definitely got, as everybody is saying, extremely stretched, and it's encouraging at least that the market has responded in this way to severely, historically oversold conditions. And the question is this just kind of relieve those conditions and give you another chance to back away or not? And I do think there's a way you can say, look, by the way, I would be the first one to say the playbook says it should be a retest. They're going to chop around for a while, go sideways. Maybe those lows are not safe around 2850 in the S&P. But the Christmas Eve 2018 low so far, and we're over a year into it, was never retested. In fact, never even came close. So I don't think you can necessarily say this is exactly how it has to be scripted. But just kind of, I think, take it as it comes. I don't know. What's interesting is not a lot.
It depends on what your time horizon is, Unwilling Fool.
Into today, growth versus value was basically still at an all-time high. You did not have a lot of churn in terms of what the market was trying to tell you. It's everything came down at once, and you sort of have this reset of psychology as well as price.
Which leads me to you, Tom Lee, who said the other day the market is, quote, not normal, but yet you're looking for what you say is a V-shaped bounce.
Yes. I think that a lot of these guys already talked about, Jonathan talked about the internals collapsing for the market. We had 6 days where the market was down over 8%. It's only happened 10 times since World War II. And if the PMIs hold above 50, which it did on today's print, 100% of the time you're higher 3, 6, 12 months later. Average gains 27%. So we're looking at potentially 3,600 by the end of the year for the S&P, even though we've actually collapsed below year-to-date levels.
That's such a tough call to make given the environment we're in now. 3,600 by the end of the year on the S&P.
Yes, because once we get through the worst of the hump, which I'm not saying there is, because Steve brought up some good data points, Cost of debt is 1%. Investment grade yields are 2.5. Companies' cost of borrowing is fallen. Stocks got to the dividend yield that's almost the same as bonds, which hasn't happened in 70 years. But fiscal stimulus plus lower cost of debt means PEs go up. I think we could have massive PE expansion.
What do you assume, what are you carrying for your S&P earnings?
Well, so by the end of this year, we really need to look at 2021 earnings. And I don't think
We're the beginning of March, so.
Sure, yeah, that's right. So as we look 6 months ahead, markets look 6 months ahead. I think earnings revisions are, there's per quarter at least $3 a risk. So if it's 3 months, 3 quarters, it's $9 at least off the top of the S&P for this year. But I'm adding that back to next year, which is why earnings.
There was news on them last week.
My original target is way out of line with reality. Like, what would be the thing that would tip you over?
And I remember they had their CEO was on
Last week we saw
MSNBC, I think on Friday.
S&P looked like a big bouncer. Yeah. But investment grade bonds were rock solid. And the yield curve steepened. So it looked like a liquidation, especially into the end of the month. If this week had followed through and investment grade and high yield bonds went beyond
So credit spreads are important too.
credit leads equity.
Do you think that they're a valuable signal given how much liquidity there is in the market and how much people are chasing anything with a positive yield? Do you think they're still useful?
There's distortions. I think the distortion really in the last few months may be more in the equity because, as Quincy was telling me off camera, calls really seem to have affected equities. But CEO visibility is not bad. I mean, I did a lot of reality checks. There is hysteria in the market, but the company visibility isn't as bad. I mean,
How much of this then, Steve, has to do with expectations that the people you cover every day are going to come to the rescue? I mean, part of the reason why the market has bounced, you had WHO headlines which were deemed to be positive. These G7 ministers and central bank governors are going to have a teleconference tomorrow. The IMF is on the case. They said Friday is on the case.
BA high a day 285.
I guess is mounting the steeds right now. I don't think they've deployed just yet. And I think the market's going to trade the way the market has to trade. I mean, I think there's technical stuff and bounces and bottoms and stuff that I don't really begin to understand. But a bit of that trade has to do with the idea that it looks like both the U.S. and global institutions are starting to get going. And we just had, as Scott said, a statement from the World Bank and the IMF. They stand ready to help. And if you watch the incredible, dramatic, really, changes in how the market is pricing in the Fed. Scott, we just did these numbers. I don't know if they have them in the back. But there is no play at all for a 25, no play at all for a 50. The play is 75. What is that, a 75% probability? With some guys thinking that when the Fed goes, it goes a full percentage point. And that's just before the March meeting.
The technical bounces and bottoms, etc. I gotta tell you though, that's the whole ballgame. Most of the policy reactions, the feedback loop from prices into reaction on the part of policymakers is the game, which is why Jonathan's research is so important right now. Because if we were down another 800 points right now instead of up 800 in the Dow, this would be a very different conversation, and I guarantee you the meetings taking place among authorities who can do policy things would be much more urgent. So I actually think price action is going to be more important than cutting that price.
The Fed is breathing a sigh of relief right now, Powell is, that he didn't have to come in Monday morning and do something that he may not.
All right, we're in lunchtime, East Coast. I'm going to go grab a snack. I'll be back in just a few. 5-10 minutes. I'll be right back.
The market, we discussed this last night on our special. The market may not give the Fed the time that it wants. Today, perhaps. But
does that do to corporations? What does it do to demand?
Doesn't make you want to travel more.
Yeah, it doesn't change anything. I think it's ludicrous for the Fed to, not ludicrous, ridiculous for the Fed to go and cut 50 or 75 because the market's fallen out of bed a little bit, as it does every other year since 1950.
Yes, but it's not necessarily because the market's fallen
No,
out
I
of bed a
agree. It's
little
because
bit.
demand has come
Of
down.
well, it's because of demand coming
Right.
down. It's
Supply
about
shock, demand shock.
expectations like Ed Hyman of ISI, Evercore ISI, saying that you're going to get zero growth for 2 quarters coming up. Yeah, you get a snapback on the other side of that, but you're going to go 0-0 back to back. I mean, Goldman's taken their earnings expectations, I think, to 165.
Right, but the massive liquidity that China has put into the market, into the economy, has done nothing to get workers back to work. So it's a short-term fix. It's just more crack that we've seen for the last 10 years into investors' veins. So I think they have to wait till there's visibility. I don't know why you think that CEOs have visibility, because I've spoken to 20 companies over the last month, and they don't have any visibility. NXP put out something last night, sent you their 8K, which said, we're cutting the quarter by 50 to 150 million. That's a monstrous range. There is no visibility right now.
You want to back up sort of a little bit what Josh was talking about?
Well, I think let's set the backdrop to this unprecedented decline that we just had. We came into February with some historical extremes, right? NASDAQ 100, widest spread versus 200 days since the tech bubble. You had names like Microsoft also at extremes. And then what do we see? We came into February, the virus escalated, and you had the quickest drop from a 52-week high to a 52-week low for the Dow Jones Composite, which is industrials, transports, and utilities, that we've ever seen. 10 days high to low. The prior previous record was around 36 days in 1987, into the 87 low. So I think part of this is because we had that perfect storm with complacency to the highs, and I think the speed of information and technology is allowing things to transpire much quicker.
Mike Santoli, as part of your research into what we may see, you say, quote, this whole thing is made even tougher, in your words, by the fact that all this happened with the market arguably a little bit rich and overloved. You couldn't have had a shock at arguably a worse time in this market.
Or the reaction was so dramatic because that's where we started, right? So I do think you can't always know exactly, what suspect is culpable for what percentage of what just happened, but the context was something was going to come along. Something pretty big came along, and that's also, though, if we flip that around a little bit, and maybe getting to some of what Jonathan is saying there, which is, yes, it happened fast, and yes, we corrected in a steep way, and it was very indiscriminate on a short-term basis, but did you really get washed out? Did sentiment, did positioning, did everything really have wipeout type levels to where the ensuing rally is going to be strong and enduring, and we're going to head back to those old highs? That's a very, very open question.
I hate to rain on the bounce parade, but Morgan Stanley's Mike Wilson thinks we're still going to break the lows. He says the sharp decline of the past week suggests that last fall's rally was a false breakout that creates big overhead resistance at 3,100 on any bounce. We expect an eventual break of last week's lows after the bounce.
Here's what I'd say. Look, it was false only if you look at the perspective of why the market rallies. We had flat earnings, flat revenue in 2019. So the market traded up 30% roughly on multiple expansion. On the hope we'd see 6 to 10% growth this year. Now we got to 19 times the highest forward multiple since 2000. Now that case has been damaged. So to me, it only seems logical that you go back down.
So he's right?
Right. And I wouldn't call it a false rally. I'd say it was a rally based upon those expectations. Now we're not seeing those expectations.
Well, like a straw rally. I mean, you didn't have a strong enough foundation beneath the rally, which is why the unwind has happened so dramatically.
If you had the earnings growth, I don't think Mike can rewrite history from when he was neutral to bearish the whole year by saying it was a false rally. It was an appropriate rally at the time. And guess what? When I was at a wedding in Florida, 200 people there. Nobody's worried about the market. You're absolutely right. I'm not worried about the market. I know it'll be higher in a year. It'll be higher in 6 months. But it's your point of entry. So if you have cash, I believe that you'll get an opportunity with that cash to work.
Prior to the Lunar New Year, we did start to see the Chinese manufacturing reacceleration.
Yes.
The expectations we have for this global growth that was coming out of the phase one deal and into 2020, that was happening. The economic data was there. As far as the Fed, I agree with you, Steve, but if you look at the Fed's mandate, employment and inflation, there's not going to be any inflation and job openings are falling. So I think there's actually some cover here for the Fed, apart from the fact that we're seeing dislocation in the stock
But are
market.
you suggesting, though, that, I mean, by that statement about
seeing in China tells me that you think, well, once this is all done, whenever that is, it's just, oh, well, just go back to the way it was. China manufacturing was accelerating. They were stimulating the economy and everything's good. I mean, this shock has already been bad, and it has the potential to be even worse. And the snapback, you could easily suggest, would have a much longer runway.
Right, because the transmission of the production cuts that we had over the course of the last 4 weeks are significant. So even though, despite the fact that I said that Chinese stocks have improved and we've seen some moves higher there, the impact, the longer term impact of the production cuts, whether that's 3 months or 6 months or 9 months on new orders as of goods coming out of China, we haven't fully felt that yet. We also haven't really seen any decrease in domestic demand here in the United States as a result of this. China's already grappling with that from a consumer perspective. So it will be longer, but I'm just saying, I think that kind of going back in time and having hindsight is always 2020.
One of the things you have to ask yourself is not whether this crisis will pass. It will.
Yeah.
America will survive. Markets will survive. Whenever it does, the more important question is when you have a real event, you accelerate the trend. And so the question becomes, we were moving towards lower interest rates. Have we now come to a new equilibrium here, or closer to the equilibrium we would have gotten to a lot faster? That's question for the fixed income market. Question for the stock market is, were we accelerating to a place where, are we accelerating to a place where stock prices and PE multiples deserve to be lower in that environment of lower growth?
Well,
Not to focus on the temporary, but to think about and consider, and I don't know the answer to this, how much of this is
I was, in speaking to various investors, wondering sort of where we are and where we may go, the conversation that I was hearing was the market the word deserves to be where it is. It deserved to go down as much as it did because the earnings question, there was so much in question.
There's two components of that. The bears are right about this one statement, and Jonathan could back me up. Prior to coronavirus becoming a U.S. stock market story, gold had already been rallying, and yields were already falling, and the best performing groups were REITs, utilities. That was in place before the freak out that started the week before last.
Well, that's why we asked if people were complacent about everything.
So the bears are right.
The signal was out there.
So
and
to that point, technically, and I think John's research pointed this out weeks ago, we were at a place where more than 80% of the S&P 500 components were above their 200-day. And that is kind of the ceiling for how good the market could get looking back over the last 5 years. Every time we've gotten there, something has come along to knock the markets down. So if it wasn't coronavirus, it may well have been Bernie Sanders. It would have been something else. That it probably is your best gauge of complacency. Now we have the opposite. What is the opposite extreme right now? So where do we belong? Should 80% of components be in an uptrend? Probably not. But should 90% of the market be below its 10-day? I don't think that's reasonable either. So I do think we should be somewhere in the middle, and maybe we don't need max pessimism or max complacency.
Mike Santoli, give me your last point on what Josh was just talking about.
Yeah, I mean, I think that's completely right. I do think I should dial back also, aside from talking about, as I had the early 2018 situation where we did have really the meaty part of a decline in 2 weeks and then just sort of chopped around. Yeah, you retested 2 months later. But also, the flip side of that was September, October of that year. When we were in October of 2018, you had the correction, and all the things were screaming, oversold, sentiment's really negative, and you still lost another 10% because the Fed was offsides and the economy was weaker than we expected, whatever it was. So again, I think open-mindedness is the way to really follow along this market right here, and looking for signs of true demand today by the end of the day in terms of volumes and things like that might be a tell for the short term.
I disagree with that portrayal that rates were coming down already before coronavirus hit. I was talking to companies in January.
It's a factual statement.
It's not a factual statement. It's a factual statement.
What were rates hitting in early February?
Are you going to let me finish, and you want to say what I'm
Go
going to
ahead.
say? So, because companies were, we don't need the
Just go ahead.
Because companies were lowering their earnings based on the coronavirus in January. So if you're a global investor and you look elsewhere, aside from just the U.S. market, you would see that there was some risk to it. That's why gold is rising. That's why rates are coming down. I'm not disagreeing that rates are coming down. I'm disagreeing for the reason for it.
Sure,
so coronavirus was.
But there were people that were looking at rates coming down and looking flow around the world. It's just representative of where things are. When in reality, maybe the bond market was screaming that the market was ripe for something. It just happened to be hit by a bomb.
I agree.
At the time, it was ripe to pull back.
I agree. If you only looked at U.S. equities, as some people do, you have no idea what was going on. But if you look at rates and you look at everything else and the global picture, then you have a hint that it's going on.
Just real quick, we have urged people to look further down the road. I want to look a little bit in front of them. This issue between Tom Lee and Steve Weiss about visibility of earnings is going to be key. Right now, we have economists saying they really cannot predict the next 2 quarters because it's very difficult for them to gauge the impact on earnings, on economic activity. And I think there's going to be a point where the first company is going to step forward and say, we can see 6 months down the road. And I know all you guys want to debate the double shoulders and play that, the triple bottoms and stuff like that. That's a fundamental thing.
There is no...
When somebody can say, I can see 6 months down the road at my order book.
I agree with Steve 100%. You cannot tell me that any CEO can see anything through what is right now a glass of milk.
They can only see contemporaneous data, right? So they can see how things that are high frequency then respond. So if it's consumer related, it's consumer demand. If it's theme parks, it's attendance, of course. But things that involve the supply chain, as Shannon was saying and as Steve's saying, that's going to be difficult. But that's where the massacres.
They never have visibility. They never have visibility. They thought they had visibility on January 30th, and they found out by February 29th that they didn't. Visibility is always a myth. There literally is no such thing as certainty about next month, 6 months from now. There was a lot of certainty on September 10th, 2001. It literally does not exist.
That's fine, but there's a difference between certainty and what now is
They
zero.
feel more uncertain,
Zero.
but they are always
You can
uncertain.
have some level of confidence.
I agree with that.
Now there's no confidence in where it
But
goes.
that's a feeling. That's not actual. That's not reality. No, it's not. They feel less certain now because of volatility. They have always been uncertain. We never know what's going to happen. You can't. So.
All right, whatever. Thank you for being here. Jonathan Christie, Tom Lee, good to have you. Steve Weiss, always good to have you as well. Josh Brown, it's been great having you.
I agree.
All right, we have another big show coming up tomorrow. Mark Lasry, the chairman and CEO of Avenue Capital, is going to join us for the hour to discuss the markets, record low yields, Super Tuesday, everything you need to know from Mark Lasry is coming up tomorrow. Here's what else is coming up today.
Longtime General Electric bear Steve Tusa upgrading the stock and raising his price target on it today. He'll join us next to explain in our call of the day. Plus, we're getting a lot of questions from you about a number of other upgrades. The investment committee is ready to answer them straight ahead and ask halftime. Go to cnbc.com/halftime or tweet us. The halftime report with Scott Wapner and the traders.
With the Capital One Saver Card, you earn 4% cash back on dining and entertainment. That's 4% cash back on milkshakes with extra whipped cream. And 4% to get extra loud at the show. The Capital One Saver Card. Earn 4% on dining and 4% on entertainment. What's in your wallet?
Hey guys, it's Taylor. You can buy my new album Lover at taylorswift.com.
Terms apply. Capital One Bank, USANA. Refreshing bath updates start with Lowe's Bath Savings Event. Now get up to 40% off select bath vanities, faucets, toilets, and more, including Style Selections 30-inch brown single sink vanity with a modern barn door design for $200 less, now $199. And get Pergo waterproof laminate flooring starting at just $248 per square foot. Get it installed for just 99 cents per square foot when you also purchase Pergo Gold underlayment exclusive to Lowe's. Do it right for less. Start with Lowe's. Bath offer valid through 4/8. Flooring offers valid through 3/25. See store for details. U.S. only. It's Sizzling Sprint Week. Celebrate with fantastic savings at your local Sprint store. Right now, when you switch, you can lease the amazing iPhone 11 featuring the all-new dual camera system with ultra-wide for $0 per month. All you have to do is trade in your iPhone 6s or newer in any condition. Head over to your local Sprint store now through March 8th to learn more. iPhone 11, 64 gigabytes, $0 per month after $29.17 per month credit. Apply within 2 bills. Requires unlocked trade-in, 18-month lease, new line of service, and approved credit. If you cancel early, remaining balance due. Coverage and offer not available everywhere. Excludes tax. Restrictions apply.
An interesting creature inhabits the flat, arid plains of many an automobile dashboard. The bobblehead
flavor. Because yes, switching to Geico is a no-brainer. Easy, bobblehead, easy. You won't get whiplash.
Using Bias tires, here's your chance to upgrade your rating. This spring, Firestone Ag is making it easy. On hard rewards. Visit your local certified Firestone Ag tire dealers between now and April 30th and get discounts as big as $200 per tire if you buy 2 or more eligible Firestone rating tires.
This deal doesn't last long, so visit Rudy's Gas Tire and Oil to take advantage of our hard rewards sale. Terms, conditions, and limitations apply. For full details, visit firestoneag.com.
All right, I'm back. So SPY pulled back and now moving back up. I see. I swear last time I looked at Microsoft, it was like 164 and now 168. Marbles? I don't know what that is. Yeah, crazy to see JD where it is. 52 on Sage. Yeah, 40 something I just saw. Hit the high day ticker 43.23. Thanks for the follow. Welcome. I don't have Thinkorswim, Unwilling Fold, but I am listening to it live through an Echo Show, which is handy. ENPH, high a day ticker. Let me see if I can get that high a day ticker back on here. Like I said, I'm not sure where it went. There was an update to OBS that I had to do.
but certainly generating that better free cash was critical, and they did what they needed to do on that front.
It kind of feels like it's almost a kicking and screaming kind
Hmm.
of an upgrade, right? The GE's not as bad as it was, but it's still grounded in your eyes.
Yeah, I think ultimately, as we've said before, the anchor on this is cash flow.
I don't have to play with that after hours. I don't know what happened to it, but
Judging it on can they generate any cash flow to how much cash flow can they generate, the shift of focus turns back to the P&L, and that's that part of the financial statements, revenue growth, margin improvement, is a little more linear and a little like slower, not as volatile.
I'm telling you, Fidelity is just so slow. Crazy. I was trying to pull up Amazon contracts and it just wheel is spinning.
And everybody was jumping up and down celebrating when they did 2.3 billion. So just to show you what kind of swing sentiment can have in this, the point is that right now that bull case remains 7 to 8 billion, and they're counting on a tripling in free cash flow for the next 2 years, which is just
Where's Shop at today?
with the work we've done. Just don't see it.
There's no chance that $8 is too conservative. It might just feel like the market just went through hell, and GE's an 11 and change with a better free cash flow picture. The number one, forgive me, naysayer as an analyst, admitting that he was wrong and upgrading the stock. Are you too conservative?
I'm always a little bit conservative. I'm kind of a risk reward.
Really? Huh. I've never had, like, I've sent a few people to Fidelity and I've never had them. Never heard of that.
If you look at the facts, and if they do our free cash flow number in 2021, or just look at the facts of what they've done and what they've guided to, the midpoint of the range this year is $3 billion or 35 cents. Does that support an $11 stock price? My stocks are trading at 18 times free cash flow right now. You can do the math on that. It's certainly what we know today, factually, certainly does not support even where the stock is today. So you are counting on a dramatic amount of improvement. And actually, it's interesting you mentioned that in the market volatility. GE is the most exposed in our group to what we call kind of variable liabilities. They're stake in Baker Hughes GE, which is down $3 billion since year end. Their exposure to the 10-year in their discount rates used for their pension plan every 25 basis points is $2.3 billion in extra liability, and they have a $70 billion book of pension plan assets, which was up 15% last year, that generally moves in the direction of the market. So by our calculations, since the beginning of the year, that should be, those variables on their own should be a headwind of about $10 to $15 billion on the stock price, and it's basically flat. So when you talk about market volatility, I think the market is actually getting this wrong, and they're not marking that to market. So I think we're actually being generous in the discount we give to this on a multiple basis. But again, I'm trying to be as, like you said, I'm trying to be kind of positive here and err on the side of that conservatism, and that's where the math comes out.
That's why people pay attention to your analysis, because I didn't know to the depths of the interest rate risk and things like that the way you just described.
Ah, gotcha. Could be. If you were trying to apply it to that.
Is the right way to look at this as an investor, the U.S. stock market is now 12 or 13% off its high very quickly. The rest of the world's markets are much lower. Why would you bet singly on GE versus either buying the industrial sector or just buying the market? Doesn't GE require a global economic recovery, which would equally benefit, if not more so, other areas of the economy? Like, what's the reason to just bet on this versus something broader? What would you say to that question?
I think the bull case
Unwilling full. Again, if the VIX is dropping, you're going to see some of the volatility, some of that juice get sucked out of those contracts.
the bull case sees perhaps on the buy side, the guys and gals that are actually investing money, is that I think they're looking further out, and they see a company that was earning a certain level 5 or 6 years ago that has great market shares in these industries, and that ultimately, if it's run better by better management, there's kind of an idiosyncratic story of a reversion to a more normalized level of earnings and free cash flow. And they're like, yeah, I hear you, 21's not going to be that great, but 22, 23, you just give this guy more time and it's going to be a lot better. The problem I have with that is I think it's idiosyncratic on the other side. The wind industry, anything to do with centralized power generation, is in a fight against solar on price, levelized cost of energy. That's not going to change. That's a secular trend that is negative for these guys. And they have a healthcare business that hasn't grown in 10 years. So you're really betting on this aviation franchise. And yeah,
Not today. I almost put it on this morning, but
absolutely to your point, we're talking about GE fixing their balance sheet and not, having a CDS blowout, whereas with a stock like overweight rated Honeywell, who has $35 billion of capital to deploy and just pulled back, 10, 15%, it just is a little bit head scratching that there is so much focus and so much support for this stock.
When Tusa speaks, people listen. Stephen, we appreciate the time very much today. Thanks so much. We'll talk to you again soon. All right, that's JP Morgan's Steve Tusa. Because nobody does as much work on the balance sheet, maybe other than Larry Culp and perhaps Jim Cramer, as Steve Tusa does. You did hear, I think, at the end of that conversation, the rate risk and pension liabilities.
it is a Hurley hat.
Did turn a little bit more negative after what's been a pretty good day.
Yeah, look, he does phenomenal work. Very detailed, knows what he's talking about. There's nothing that he said there that leads me to believe that he should have upgraded to neutral. The cash flow, yes, you're wrong, man. But, and it's good to admit, but he's still got an $8 price target, which is nearly 30% below the market. There's nothing he had to say positive about it. Plus, the airline industry right now, it's a short period of time, it's going through a very tough period. They very likely will cut back on their spending. So today, I understand him taking the opportunity when the market decline, and GE decline with the market, to upgrade it to a neutral, but I still think, based upon what he says, it's a sell.
Which, by the way, is what you did.
Right.
Like a
We
long time ago.
sold this in late 2017. The stock was at 19 and change. My biggest concerns are if you're looking at 3, 4, 5 years.
KRE. Banking ETF.
Modest improvements and be a going concern, but with the problems with power and
I mean, there's others that I like better, but I like that it's not at, all-time highs.
Straight ahead, how the big ETFs are holding up in this sell-off. But first, check on the S&P sectors today on this snapback for the market to see if it holds. S&P's good for a big 75 points. That's 2.5%. Utility, staples, real estate are the top three in what is green across the board. Reminder, you can always watch or listen to us live.
I mean, I like Hack is the cybersecurity ETF, 5G, obviously 5G focused ETF. ACES is the clean energy ETF. And then there's some of the funds that I like that are mostly Vanguard funds, but as far as ETFs go, it's like, all right, if I want to be in some of the cybersecurity related stocks, but I don't want to have to go, okay, well, ACES or Hack is that ETF. And to me, I think they're just, Hack. Well, that's what happens when you chase those, something like an NVA Novavax. Yeah. They do that. I mean, look at APT on because they sell the masks. that aren't even all that effective.
It's a 13-hour flight. That's not a weekend trip. 15 minutes. Oh, right. Yeah, you downloaded the TD Ameritrade mobile app so you can quickly check the markets.
Yeah, actually, I'm taking one less look at my dashboard before we board.
Excellent. And you have purchased for now? You two are all set. Have a great flight. So we'll see ya. Ah, they're getting so smart.
Choose the app that fits your investing style.
There's no furniture at all.
Yeah.
Glenn needs to understand that we have a job to sell his expensive house and not his art.
This is not a house for everybody.
Listing It Possible, all new Wednesday at a special time, 9 Eastern. CNBC, get yours.
And welcome back to the halftime report. I'm Bob Pisani. Time for ETF Edge. We saw $986 billion in stock change hands on Fridays. This is the largest dollar value ever traded on U.S. equity markets. That's according to Goldman Sachs. Think about that. There was also massive volatility around ETFs. So how did they all hold?
Sounds like Tesla moving up. Yeah, 730.
Largest high yield ETF. We're all watching high yield. HYG lost 20% of its assets last week. High yield spreads blew out. How did trading hold up, and what about today?
Trading held up really well. If you look at the high yield spreads, it didn't even go to 1-year highs. That was 470 basis points. We got to 460 last week. So those redemptions in HYG and JNK was almost as bad. Didn't have a profound effect on the high yield market.
This is really good news overall. Remember, all those people kept saying, well, if we ever get stressed, it's going to all blow up. Chris, let me ask you, the two largest VIX ETFs, the TVIX, VXX, they also had huge outflows. Given that several of these VIX products, remember, blew up a couple of years ago, how did the VIX volatility ETFs hold up, and what are they doing today?
The VIX volatility ETFs held up remarkably well, like most. There's 2,400 ETFs, Bob. They all held up remarkably well. The long, short, merger arb ETF, everything really held up well in this market. And the verbiage that was being communicated to me by liquidity providers was orderly.
Oh, I don't understand it. We had doomsdayers on sale. Whatever happens, we get real stress in the system. These more thinly traded ones with more difficult to trade bonds, like high yield or bank loans, they were going to blow up on us. Why didn't they? Why was the market orderly and efficient?
There's no crystal ball ever, but with to your point, the highest notional trading day ever, and these products held up perfectly, exactly as they're intended to do.
Nick, you had a lot of calls from clients over the weekend. You were telling me you make a device. Are you telling them buy today? What are you giving? What advice are you giving your clients right
We
now?
gave our clients two levels to look at on the VIX. The first is 42. The VIX goes over 42, you buy, looking for a trade. We hit those levels and a little bit above on Friday morning. That's when we reached a bounce today. The second level when you pile in is 55 and above. That's a real crisis, a down 5%
Is that like
day.
5 standard deviations?
We did alert these Tesla 800s for this week. Crazy, crazy.
Buy at those levels, you wait 3 to 6 months, you have a gain. So those are the two levels to watch
And
for
you're
a
working on
bounce.
historic ideas.
Exactly.
Is there any chance this is one of those black swans like 2008?
Yeah, maybe. Again, I don't know anything about them, so I don't know what they're working on. Looks like their ER was not great.
Online show starts at 1 p.m. Eastern Time on etfedge.cnbc.com. We'll talk more about this staggering volatility. Get a take on the sell-off from Dan Weiner. He's the chairman of Advisor Investments. Can't afford to miss that, Scott. Back to you.
And we won't, Bob. Appreciate it very much. Thank you. Many of you are asking about a number of stock upgrades today. We're going to answer those questions coming up next in the half. Probably some stocks that all of you own. We'll do it next.
Capital One knows life doesn't alert you about your credit card.
And stop, Bradstreet. It rides the khaki shorts. Your GNL energy bill went up 60% this month. Seems like you want to know. Stand clear of closing doors.
So, meet Eno, the Capital One assistant that catches things that might look wrong, like increases to a recurring bill, then sends an alert to your phone.
Well, unwilling full, probably the amount of the dividend, and then, hopefully bounces back.
What's in your wallet? See CapitalOne.com for details. Limitations apply.
Hi, everybody. I'm Kelly Evans. Here's what's coming up on the exchange today. Stocks are rallying as investors bet that stimulus is on the way. But even Goldman says cutting rates won't be all that effective. Some interest euphoria in the market.
And that's usually what you expect. Yeah.
Hitting a record high. What changes are investors making in light of this volatility, and will they pay off?
flash of Philip Morris, right? Here's Philip Morris International trading more than 2.5% higher after announcing. Its current CFO, Martin King, will transition to a newly created role as CEO of Philip Morris America. I just spoke to King a short time ago. He says this new role will focus
Wave long. I have some Ford calls, but they're way out there. I bought some. Oh my gosh, those are out to like 2022. I have the $10 calls for January 2022. I mean, those are only 34 cents.
Traders are answering your questions now on a few stocks getting upgraded today. First up is Steve Weiss. Baidu got an upgrade today.
Yeah, it was last
Nice J-Bug.
beat expectations. Stock's down massively from its highs of a while ago, from about 250 to where it is. Look, almost one half of the company is an IQ, which is the Netflix of China. I think the company does well. It's the online search engine. More people can be home, more people can be searching, more ad growth. So I like this company. I don't think it's cheap. I'd rather play Volvo, which I think is more reasonable. But if you're not, I'd rather
What happened to my water bottle? I just filled it. Be right back. Gotta go grab my water. I don't know if I'm buying any Chinese companies. J-Bug, as soon as I have time. Definitely something I want to do. Yeah, what's Seagate doing? I haven't looked at them in a while. Down from its highs around 64. See, STX pretty close to that 618 extension. 46 to 48 being strong support here on the weekly. And those fibs I drew were on a weekly chart. If we measure you can see here on the weekly chart, it respecting these fib levels. It came down to the 382 extension on this. So that's the measured move here. Measure it using fibs here from this impulse low to the impulse high. And it's playing along nicely with those levels. You can see 46.21-ish, holding strong support. It's got to get above the 618, which I got at 53.01 to to expect some continuation. J-Bug, I don't use the 921, the 9 very often. It moves too fast, and for me, too many false signals. Now, if we look at this on a 1 minute, if you wanted to play at this 49.50, you'd want to see that hold intraday. But it looks good. I mean, the chart looks good. Let's see. I want to have a long-term investment in a stock. Div 544P 34 current stock price. What is your question? Should you go for it? What's the stock? I mean, it's a bank. When I get into stocks for a dividend yield, it's usually because it has high dividend yield and I like the growth potential for whatever reason. So I particularly like stuff like MDP, which I've been talking about quite a bit, which is well off its highs, has a 9% yield right now. They have increased their dividend 27 or 26 straight quarters. And I think there's a turnaround story there. So I like it. Yeah, I've already looked at AMD, but we could look at it again. What do you want to, what's your question? I mean, I like what I see here on the AMD chart. This bounce off 41, that held really well, and it's just been moving up. This is a 30-minute chart, so you can see these candles on a 30-minute chart moving in upward direction. I like it. There you go. Okay, Bobby, I hear Mel answering on Square. They had an offering. Can you buy it for the next 8 to 10 months? I bought some. I bought some down here. I like this 41, support holding at 41 there. We can draw the fibs here on this move on the weekly. I'm glad it got a pullback. It needed it. Let's just look here. As long as it holds this 45.90-ish, I think it's in good shape. The only concern that I have right now, which is the same concern with anything, is that we don't know this drop on coronavirus. We don't know if it's over. If it's not and things continue to escalate, we could continue to drop. That's all. But if you're not worried about that, if it's like, I'm going to hold this long enough that I don't really care, then, I've started end of last week saying, everybody wanted a pullback and a dip. Now we got it. So if there's stocks that you've been wanting to get into, but they were too expensive, it's like, okay, maybe now's the chance And so I've been picking up small positions in some of this stuff that I felt like was just priced way too high and needed a pullback. Bobby, I bought Apple in the 260s. I bought some BA. I bought some AMD. What else? I picked up some more MDP. A little bit of Microsoft. That's probably about it. Bobby, 260. My average on Apple is 262.99. Here you go. But those are like I said, stocks that I wanted to own, and I felt like I was waiting for a dip to buy them. I mean, BA could see more pain, more downside, but I think eventually it's back over 400. But it could take some time, and I'm okay with that. I want to pick up a little more Microsoft, but I'm just trying to, again, I'm not sure that we don't see some more downside in the market. I mean, all I'm hearing is the number of cases continuing to go up, so.
Investors are now betting on several rate cuts from the Fed to calm markets. And take a look at these probabilities. there's now a 75% chance of a 75 basis point rate cut in March. That's in 2 weeks. There's a 15% chance of a full percentage point cut now. And today we're also learning that G7 central bankers are planning to call tomorrow to weigh in response to the spread of coronavirus. Joining me now with more on what policymakers should do here, Jason Trennert is chairman of Strategic Research Partners, and Brian McCauley is co-portfolio manager of the Hennessy Focus Fund, and he's also with us. So it's great to see you both. And Jason, I'll just begin with you. These rate cut
What about T-Doc? What's it doing today? 123 from a high of 148. $260, $370. And it's made an $11 move today. Yeah, I know. I see that. I don't trade this ticker, so nice move though. Well, that's what I'm wondering on Willing Full. How many? That's what they keep talking about. Is the same thing I was talking about, like Apple, some of the others. How many people are going, oh my gosh, I missed my dip opportunity? I have no idea. Again, I think there's still some fear of, some further downside. Oh, BA 287.
Certainly. So obviously we're looking at relatively unprecedented circumstances with the coronavirus. It could probably will get much worse before it gets better. And so we expect that we're probably in for some short to intermediate term economic pain. But at the Hennessy Focus Fund, we try to take a very long-term view in investing. And so what we're focused on in an environment like this is not trying to predict the direct economic impact in the short term or market impact, but how are our businesses going to fare through this environment and what does their long-term prospect look like? So we're reanalyzing, okay, what do our balance sheets look like? What's the persistency of revenue growth and demand of the businesses we have? And importantly, what does the supply chain look like for these? And so we've got a handful of companies that we think are very well positioned for what might be a difficult economic time, or also pretty well positioned if things pass without much.
And those include Encore Capital, that's the company I mentioned a moment ago, American Tower, the cell tower company, O'Reilly Automotive, which is an interesting play. But my sort of final question to you, Brian, is would you then, looking through these companies exactly the way that, thorough investors should be looking through them, would you prefer to see a monetary response here or something that could be more targeted in terms of a fiscal response? What do you think would be best? What would make you as an investor feel most comfortable going forward?
Well, I think that it's important to recognize that we're still relatively early in the unfolding of how coronavirus is going to play out in the U.S. and globally. And so I would be hesitant to rush forward too quickly with strong fiscal or monetary response. In fact, I think that too strong a response, too much alarm might cause more damage than it does good. So I would be measured in my pace of response.
All right, we have to move on, but Jason, before we go, how much of today's rally is
I just say, Kevin, I don't think it's that much. I think it has a lot more to do with the G7 call that's going to be tomorrow, and an expectation that there's going to be some coordinated response among the G7 countries. But you know, I think at this point, and then tomorrow is Super Tuesday. We'll see. You know, if Mr. Sanders wins, we'll have another something else to work.
Let's go look at ALGN. This thing has just gotten just demolished. Right at the 200 here on the weekly. I have never taken one of those, J-Bug. Unwillingful, why would I buy SDC? They've got all kinds of issues right now. There's a big difference between the two, in my opinion. One of them actually requires a trip to the dentist. It's the same idea, but no, it's not the same thing. Smile Direct is like they send you a mold and you're supposed to do it yourself and send it back. And there's been a lot of issues. Now, I don't know, the depth or detail. It's just they've had a lot of negative press. No. I think you could say they're similar, but they're definitely not the same. Yeah, I heard that. Unwillingful. Murph, for charting, I use TradingView. Snap got clapped. Yeah, $14. Is it Facebook that was, I don't know. Is it Snap or Instagram that? Or no, it's Pinterest. I think that Facebook said they were coming out or they were releasing a product to compete with Pinterest.
going to feel like a long time for us, even with a V-shaped recovery in China, but the trajectory should be the same. Again, productivity hasn't changed, and productivity is what drives medium-term economic growth.
What about Hong Kong, where we're seeing some pretty innovative measures, whether it's direct stimulus to citizens or, tax breaks, both to citizens and businesses and other measures, I think some forgiveness of electric bills. Is it just China where you're watching in terms of the biggest hits to the global economy on this, or should we include Hong Kong and Japan and some of the other biggest economies in the region?
Well, I think where you would be concerned is something that complements in a bad way the Chinese hit. And there, Hong Kong is a financial complement that could affect credit, and Japan and South Korea are supply chain complements. So those are two major areas of outbreak in Japan and South Korea outside China. That's going to disrupt the supply chain for longer. The outbreak in South Korea comes after the outbreak in China. We could get China back on its feet, in May, for example, and still be facing problems in South Korea and Japan. So where I look for concern is areas that are going to unfortunately complement the Chinese blow to the global economy, and that's in East Asia.
Okay, Derek, we appreciate it. Thank you, sir. Derek Scissors is Asia economist at AEI. Coming up, 401k trading activity hit a record at the end of last week. So what changes are investors making in light of this market volatility, and should they be making any changes at all? That's next. Plus, more on the supply chain fallout from coronavirus. Two CEOs with ties to China will weigh in on how their businesses are faring. And take a look at the tech spider ETF today. It's up over 3%. It's on pace for its best day since June 4th. Apple is leading the way, up more than 6%, and on pace for its best day since December of 2018. And as we head to a quick break, don't forget you can always watch and listen to us live on the go on the CNBC app. The exchange benefit too.
Mom, delivery!
You've been loading up on things from Walmart.
Yeah, I used my new Capital One Walmart Rewards card. It earns unlimited 5% back on everything I buy from Walmart online.
Say what?
5% back.
Say what?
5% back.
Say what now?
5% back.
The Capital One Walmart Rewards card. Earn unlimited rewards, including 5% back with Walmart online on top of Walmart's everyday low prices. What's in your wallet?
Terms and exclusions apply. Capital One USANA. Refreshing bath updates start with Lowe's Bath Savings Event. Now get up to 40% off select bath vanities, faucets, toilets, and more, including a style selections 30-inch brown single sink vanity with a modern barn door.
All right, I got UVXY crawling up here. SPY pulling back. Let's see what SPY does right down here. See if it's going to hold, or if we're going to see some more downside.
Bundle home and auto with Farmers Insurance, and you could save an average of 20%. We know a thing or two about how to save a buck or two. Call 1-800-FARMERS to get a quote today.
Crisp down at 52, low a day ticker. We got the VIX moving back up.
Switch to Boost Mobile and get 4 free Samsung Galaxy A20 phones on our super reliable, super fast network. Step up with Boost Mobile. Free phone limited to new customers and one for one. Additional restrictions apply. See boostmobile.com for details.
Still using bias tires? Here's your chance to upgrade your radial. This spring, Firestone Ag is making it easy. Farm Hard Rewards. Just head to your local certified Firestone Ag tire dealer between now and April 30th and get discounts as big as $200 per tire when you buy 2 or more eligible Firestone radial tires.
This deal doesn't last long. So visit Valley Tire and Service to take advantage of Farm Hard Rewards soon. Terms, conditions, and limitations apply. For full details, visit firestoneag.com or contact Valley Tire and Service in Oshkosh to learn more.
Give your mornings a remix with a delicious new Beyond Sausage sandwich from Dunkin'. Say what? It's a tasty Beyond Meat sausage patty with egg and cheese, all on an English muffin. Oh yeah! That's 10 grams of great tasting plant-based protein.
Great taste plant-based. Wait, it's plant-based?
Yeah, it's plant-based. And it tastes great.
Yummy!
Try Dunkin's Beyond Sausage Sandwich. It's a whole new way to start the day. America runs on Dunkin'.
Tick has been below the zero line for a bit here. Let's see what happens.
About an hour ago, we topped out with a gain of about 815 points. The Dow we're up 657 right now. position their portfolios out with last week's sell-off, ignoring that old adage of staying the course when it comes to retirement savings. And we'll let me bring in Rob Austin. He's Vice President of Research at Alight Solutions, which tracks this data. And our own Sharon Emerson is here as well. Rob, we'll just start with you. And what can you tell us? What are people buying and selling?
Yeah, thank you so much for having me, Kelly. So last week truly was a historic week for 401k traders and investors. What we saw was last week, the volume increased throughout the week. By the time Friday hit, it was almost 16 times an average day. And what we saw, Kelly, was that people were leaving equities and moving to fixed income. It's clearly a reaction to the market correction.
Sharon, I mean, we hear that and it can, listen, I'm not trying to call whether bond yields can go lower because they have defied, people saying they can't go lower for years now.
See if we get a bounce here.
What do you think when you hear what people are doing? Well, it's worrisome that they're making these knee-jerk reactions. It's important, though, that they're looking at their 401k. Some people never look at their 401k. So this is a wake-up call to do that. But what they should be doing is really thinking about when they're going to retire. If you're in your 20s, 30s, 40s even, you have such a long time. You should be invested. You should be staying the course. 80% stocks, 20% bonds, probably most financial advisors say. And you should be checking that asset allocation and actually making sure that your contribution rate is perhaps even higher than it is.
If we're gonna get a bounce, this would be the place to do it. Come on.
So if you're taking a look at the 401k, see what you're contributing as a percentage and make sure you're taking full advantage of the free money. Sharon brings up an interesting point, Rob. Is there any way of knowing sort of what age breakdown we're talking about? Were the people buying bonds, those closer to retirement or those with a long time still?
It really was across all age demographics. And last week was truly historic.
So I bought that LG Craft Ice fridge, which I really like. But what they don't tell you is that it takes 30 hours for 3 of those ice balls. 30. It's crazy. Gotta wait 30 hours for ice. That's insane. That's too much work. That's why I wanted the fridge, because I don't have to think about it. It's like using the ice molds, but you don't have to mess with, remembering to refill them.
So far, we haven't quite seen exactly what's happening, but we are keeping our tabs on this one. It should be pretty interesting.
All right, do keep us posted. It's fascinating. Rob Austin, we appreciate it. With the Light Solutions, our own Sharon Emerson, thank you as well. As the market does rebound today from its worst week since the financial crisis, the free trading app.
Yep, BA 288.85.
Hey, Kelly, a widespread outage at Robinhood is forcing its traders to stay on the sidelines today. The startup telling users they've identified the issue, but as of a few minutes ago, they still can't make trades. This isn't the first glitch we've seen over at Robinhood. In November, an isolated group found a way to trade with what they called unlimited margin. Robinhood's not alone this week, though. Fidelity, Charles Schwab, and TD Ameritrade
Keep them both.
That's true. We looked at some of the top stocks on Robinhood last week. We have Virgin Galactic, Apple, Tesla, and a few of those stocks are actually trading at about 50 or 58% of their 30-day average trading volume. So some on Twitter are speculating that that could be due to some of these millennials not actually buying today on Robinhood. They've got 10 million users. So we'll see when they actually open again if that's the case.
That's a great point. Kate, we appreciate it. Thank you, Kate Rooney. A tough, tough day for those trying to get to their Robinhood accounts. Coming up, Goldman
Getting a drop here.
out there that is immune to the coronavirus. Their head of commodities, Jeff Curry, joins us to explain why. And take a look at shares of Twitter. The stock is soaring about 7.5% today on reports that Elliott Management is seeking to replace CEO Jack Dorsey and has taken a stake in the company. The activist firm is seeking to replace Dorsey because his attention is divided as CEO of both Twitter.
Mom, delivery.
You've been loading up on things from Walmart.
Yeah, I used my new Capital One Walmart Rewards card. It earns unlimited 5% back on everything I buy from Walmart online.
Say what?
5% back.
Say what?
5% back. Say what now?
5% back.
The Capital One Walmart Rewards
Too much growth, not enough dividend. Well, unwilling full.
Walmart online on top of Walmart's everyday.
Do you really care about a 2% dividend yield or something if a stock can go up 20 or 30 bucks? Or more? I mean, I'm selling the cheaper dividend plays, higher yield dividend plays that I have. I've been selling those, moving money into, the growth names that I've been waiting on. Was there BA news? I don't know. I mean, I have a couple, but nothing major.
Celebrate this sizzling Sprint week with amazing savings at your local Sprint store. Now through March 8th, switch to Sprint and get $100 via prepaid MasterCard. That's right, you'll get $100 when you switch.
BA just likes 300, I think.
Now through March 8th to learn more. Requires port online registration and 45 days of service on a new line before card ships. One per account. Card terms, conditions, and exclusions apply. Member FDIC. Restrictions apply.
And now another edition of Obvious News from Geico. Experts now say that wearing more clothes in the winter will
Max Hart got its ass kicked. That's what. I don't know. Bouncing right here at the 89 EMA on the daily.
Also in obvious news, Geico makes it easy to save money and easy to reach them with licensed agents available around the clock. So switching is a really smart decision. That's obvious news from Geico.
Coronavirus fears, market volatility, dilemmas for investors. Should you buy, sell, or sit tight?
Intelsat, they've got that whole thing going on with the FCC bid.
Welcome back. The business world is remembering one of the most iconic CEOs of the 20th century today. Jack Welch, the legendary former chairman and CEO of GE, passed away today at the age of 84.
I mean, that thing's probably not going to do much until that all gets resolved.
Industrial conglomerate. Here's a look at his remarkable life. He's been called a white-collar revolutionary.
My name is Jack Welch. I'm Chairman and Chief Executive Officer of General Electric.
From working-class Massachusetts kid to GE plastics engineer to CEO. He took an old line industrial company by the throat and through ingenuity, vision, and sheer force of personality, turned it into a global leader in finance, media, and high-tech healthcare. During his 20 years running General Electric, from 1981 to 2001, Jack Welch drove the company's market value from $14 billion to more than $400 billion. He was called Neutron Jack, a name he hated after cutting more than 100,000 jobs during his reign. Jack Welch streamlined GE
establishing a blueprint for other CEOs along the way. He slashed payrolls, closed factories, and shuttered or sold GE subsidiaries that were not number one or number two in their industries.
A role for the mediocre is one that is short-lived.
Welsh was passionate and unstoppable, a visionary who spearheaded GE's shift from manufacturing to financial services through numerous acquisitions, and always made sure to point out that he made his best deals on the golf course. In 1986, GE dove headfirst into the media business with the acquisition of RCA, which owned the NBC Broadcasting Network. Welsh sold almost everything else, but he kept NBC. GE executive Bob Wright was named president of NBC, and in just 3 years, the network made its first foray into the cable industry with the consumer news and business.
Yep, Unwilling Fool. Definitely could see some more.
Financial News Network was key to CNBC's later success.
It's no different than any other game. And what we had to do was to take it from being a dry text in a paper to the locker room, if you will, to show what the game was all about, how the winners felt and how the losers felt. And that's what CNBC was designed to do.
By the end of his tenure, Welsh was known less as a cost cutter and more for his dynamic management style. He pioneered informality in the workplace, abandoning management bureaucracy and archaic business ways. A demanding
You don't expect growth. Well, again, it's what's your time horizon? In the short term, they may not, but when I'm buying Apple and BA, I'm, buying them to hold them.
A man of surprise, he often unexpectedly stopped in at GE plants and offices or sometimes in the newsroom. In 1999, Fortune named Jack Welch manager of the century. Before stepping down as CEO in 2001, he set up an internal succession race for his job, calling the eventual choice the most important decision he would ever make. Jeffrey Immelt succeeded Welch, but the company struggled in the wake of the 9/11 attacks and the financial crisis of 2008, which was devastating for the lending unit that Welch had dramatically expanded while he was CEO. Welch's retirement turned out to be anything but. He continued to lead the dialogue of modern business as a management guru who concentrated on winning and never looking back.
How can I ever regret? I mean, I'm an Irish kid from Salem who ends up with the greatest job in the world, and I was trying to make $10,000 to live on. I mean, I had a great run.
And his wife Susie sending the following statement to us. She says, more than anything else, leader, business icon, management genius, more than those things, although they are all true too, Jack was a life force made of love. Pure, bright, minishable love. His irrepressible passion for people, all people, his brilliant curiosity about every single thing on earth, his gargantuan generosity of spirit towards friends and strangers alike. She says they added up to a man who was superhuman yet completely human at once. He changed the world by touching people deeply and authentically, helping them see and reach dreams they couldn't even imagine for themselves. And somehow, crazily somehow, he also managed to be the greatest husband and stepfather who ever lived, giving our family 20 amazing years of adventure, happiness, and joy.
Bobby, what kind of impact does that have? I don't know. I'm honestly asking. Know who she is, but I'm not. I don't have any idea what kind of impact that would have. I'm watching the futures move up now.
So Jack was one of the first people that I ever met when I joined CNBC, and passion is who he just had the most amazing drive and passion, and it was all about winning. That was the goal. Whatever task he gave you, you had to win. And the worst feeling in the world was letting him down. You just wanted to crawl underneath a rock and not come out for about 20 years. Because he gave you everything that you said you needed to do whatever that job was that you wanted to do.
I heard something about Robinhood saying that they were going to reimburse their users for losses related to outage. That could get interesting.
Well, he was the one who sent me to China and Russia and Japan and India to do documentaries about the emergence of those economies. And I
Well, what they were saying is there's going to be a lot of users that are like, yeah, I wanted to buy Apple at 260 and I didn't get to, or what, you know. No, but you know, back over 330, 340, 350.
Okay, you know how it feels when you've saved enough for that long-awaited home edition? Now imagine an edition on that edition. That's the feeling with Capital One, where a new savings account earns an interest rate 5 times the national average. That's right, 5 times, as represented by 5 times more singers. This is banking reimagined. Capital One, what's in your wallet?
Terms apply. Rate comparison based on FDIC national rate. Capital One NA.
Like Tesla long.
Mattress Firm's President's Day sale ends Tuesday. Save up to $600 when you get a king bed for a queen price and a queen for a twin. Like a sleeping
We did get those 800s coming in.
But hurry, this sale ends Tuesday. Visit mattressfirm.com or a store near you to shop our best deal of the year. Your budget stretches further at Mattress Firm.
Nice bounce on the S&P futures.
Lowe's started when 2 GIs returned from World War II. Today, we proudly employ nearly 20,000 veterans. We don't only honor our veterans on holidays, we honor our military every day. Over the past 5 years, Lowe's military discount has saved military families nearly $4 billion. And through our home program, we partner with the USO, Operation Finally Home, and AmVets to provide services to better the lives of our country's bravest. Go to Lowe's.com/military to learn more.
Welcome back to some breaking news on the race for the Democratic presidential nomination. Elon Moy with us. Elon.
And Kelly, Senator Amy Klobuchar is suspending her presidential campaign and announcing that she will endorse former Vice President Joe Biden. Klobuchar will fly to Dallas tonight, where she will appear at a rally with Vice.
Yeah, I just don't know if I can buy Tesla 800s at, what are they, like $7, $8? I don't know.
And Elon, you know, we were just talking to Meg about this off the top of the hour, but tomorrow is Super Tuesday, so now we've had Pete Buttigieg
Yeah.
and Klobuchar both dropping out before that, like you said, trying to kind of coalesce support. But I wonder as well if there's going to be any impact from coronavirus from people who might not be showing up to the polls or from results that might have more absentee ballots than they would have thought of just even a few short weeks.
I'll tell you, for me, this type of environment is a little tricky because I'm typically trying to trade off those longer term trends of support and resistance, and a lot of those aren't being respected. And there's a lot of chop and indecision. So it makes trading options directionally difficult. So that's why I've been more focused on, okay, what are these stocks like BA or Apple that, you know, I've been wanting to get into. And I've been trading, it more commons for me than options right now. You will get chopped to death in this sort of
Well, I think it's hard to take a directional view on oil right now, given the fundamental uncertainty. As a result, we just don't
Tesla registrations plunge in two of Musk's top European markets. That was about an hour ago.
commodities. One thing to keep in mind is that they're spot assets. They have to reflect today's supply and demand fundamentals. In contrast, financial markets are anticipatory assets. They can start to price once we hit bottom. They can price the future. Given that with commodities, they're going to be dealing with the surpluses. As you pointed out, it's the worst demand shock since 08, 09. They're going to deal with the surplus until at least in the second half of this year, which means we would be a seller of most rallies.
But we do, commodities do have futures markets, and there are ways of looking to see if the curves are, kind of up or down shaped, let's say. What do you see when you look out there? Has most of the damage to the oil price been priced in now, or do people think the price is going to keep dropping?
Well, actually, commodities are the opposite of what you would think about the expectations of forward curves. When the forward curve is upward sloping in a commodity, it means you're building inventory. It means you would have to buy the commodity today, put it in storage. You want to have a higher price in the future to pay for that cost of carry. As a result, we look at oil. Yeah, the first two contracts are what we call backwardation on the front end. But when you look out over the curve, the rest of the curve is in a contango, which would indicate that this market is in a surplus when we start to look out 6, 12 months out from the forward.
It's encouraging people to build inventories right now, and that means going forward we're going to continue to have more supply than even as that demand is dropping off. All right, so we've hit 43, I think, on the.
Yeah, I think UNH. I heard something about them.
Downside would be somewhere in that 45 to low 40s, which would translate to somewhere in the high 30s on a WTI basis. But I think the key here is that the fundamental uncertainty about this and the extent of the demand damage.
UNH is looking good.
Very high. If we think about the outlook for oil, there's three things we're watching: China, ex-China, and OPEC.
I think they were talking about some options flow just a few minutes ago, maybe. I don't see anything.
And we're seeing, a reduction in the overall cases. We're seeing restarts in economic activity in China. The problem is it's now
UNH is cranking though.
developed markets, and we don't know the extent of it, which is why we be careful of calling the bottom right here.
So let me ask you about gold before I have to let you go. How high? The all-time high, I think, was around $1,900 several years ago. Are you seeing us go above that level?
Our target is $1,800 an ounce right now, and versus the 1900.
What are we at? 264. And the 265s are $7.
Which tells you just how strong gold is today, in the $1,600 an ounce range. Now, there's three things we're watching on gold. The first one is you have a lot of central bank easing. We like to call gold the currency of last resort. And in the current environment, when you have 9 out of 10 of the G10 banks easing, you're going to have a lot of debasement in the currency. Second thing is de-dollarization. Central bank demand from emerging markets remains high. I like to point out central bank demand last year with the highest since the Nixon era, representing 22% of gold supply. We don't see that changing anytime in the near future. The third reason we like gold really has to do with it's the best hedge for geopolitical risk of any sort, particularly the type
I mean, even the 270s, which are $5 out of the money, are $5. Between the two, and it's just, whew.
with the upside target of $1,800 an ounce.
All right, so 1,800 for gold and maybe high 30s for WTI.
On Brent, I'm comfortable saying in the 40s. The thing is, when we start to go down, that differential starts to contract. So let's say the low 40s on Brent, and if the differential stays where it is, you're definitely talking in the high 30s on WTI.
All right, Jeff, it's great to have you again. Not often the
Sounds like Hum, UNH, ANTM, Anthem, MOH, CNC, and ABC are all moving.
Well, China's manufacturing activity did slump last month as coronavirus shut down factories. Up next, we'll talk to executives of two companies with supply chains dependent on China to see how they're dealing with the outbreak. And take a look at the best performing sectors right now in today's market. They are real estate, technology, energy, and financials. We should note all 11 sectors are higher, and we'll have a whole lot more on this crowd.
What happens on the bike is what you commit to. To the hills.
People asking how to turn off notifications in Discord.
And the milestones. But what happens off the bike
My dad just ran his fastest 10K yet. I've never seen him so sure of himself.
is why it matters. Try it for yourself with 30-day home trial. Visit onepeloton.com to learn more.
Capital One presents a 30-second audio tour of Ireland. Sheep, berries, golf, Charming Castle, Charming Castle, Charming Castle, Charming Castle, Charming Castle.
You know you can actually go there when you use the Capital One Venture Card. You earn unlimited double miles on every dollar you spend on every purchase, which means you'll have plenty of miles to actually travel to Ireland. The Capital One Venture Card. What's in your wallet?
Capital One Bank USA NA.
Mattress Firm's President's Day sale ends Tuesday. Save up to $600 at the King Bed for a great price and a quick
Yeah, probably, Omar.
Sleepy's memory foam queen mattress now just $3.99.
Seeing a pullback here on the futures.
Full base when you spend $6.99.
Same on SPY. Did not go back up and test this high a day.
Your budget stretches further at Mattress Firm.
Offer valid with qualifying purchase. Restrictions apply. Valid at participating locations only. For offer details, visit mattressfirm.com/sale.
Now at Napa, get a free Chase Elliott Racing app with any $25 purchase. Set of brakes? That'll cover it. New battery? App-worthy. Replacing an air filter? Then adding on wiper blades and headlamps just to break $25? Chase approved. So get what you need and a free Chase Elliott app. Quality parts, helpful people. That's Napa Know-How. At participating Napa Auto Parts stores while supplies last. Offer ends 3/31/20.
Refreshing bath updates start with Lowe's Bath Savings Event. Now get up to 40% off select bath vanities, faucets, toilets, and more, including a Style Selections 30-inch brown single-sink vanity with a modern barn door design for $200 less, now $199. And get Pergo waterproof laminate flooring starting at just $248 per square foot. Get it installed for just 99 cents per square foot when you also purchase Pergo Gold underlayment exclusive to Lowe's. Do it right for less. Start with Lowe's. Bath offer valid through 4/8. Flooring offers valid through 3/25. See store for details from the Sultan.
It's Sizzling Sprint Week. Celebrate with fantastic savings at your local Sprint store. Right now, when you switch, you can lease the amazing iPhone 11.
Get this asked all the time, how to turn off notifications on Discord in mobile.
iPhone 6s or newer in any condition. Go to your Sprint store now through March 8th to learn more. iPhone 11, 64 GB, $0 per month at $29.17 per month credit. Apply within 2 bills. Requires unlocked trade-in, 18-month lease, new line of service, and approved credit. If you cancel early, remaining balance due. Coverage and offer not available everywhere. Excludes tax. Restrictions apply.
Welcome back to the exchange. The coronavirus outbreak in China is shutting down Chinese factories and wreaking havoc on supply chains for a wide range of companies here in the U.S. For more on this ripple effect and what it will mean for the U.S. economy, I'm joined by Lou Penny. He's the CEO of Echelon Fitness, and Josh Norsel is Vice President of Sales and Marketing at Hog Wild.
I don't know how, though.
Manufacturing their products. It's great to have you here, both of you on a day like this. Lou, I'll just begin with you. What can you tell us, as I read here at some points, the supply chain sales is entirely shut down. How is the product availability looking for you right now?
Well, the coronavirus happened during Chinese New Year where they have a few weeks, 2 to 3 weeks off. So it extended that Chinese New Year and kept everyone out of the factories. The good news is we got our first shipment shipping last week. So shipments are starting to move. Even when you produce our factory, it's 100% back on board. But you have all these different suppliers, and some of the suppliers are not coming on board yet, but they are starting to come on board. So it's getting much, much better, and we're going to see about a 30-day lag time in some of our deliveries.
So 30-day lag time, but so far no major shortages. You're not changing pricing or dealing with price changes at all.
No, we fortunately prepared for Chinese New Year, and always for Chinese New Year we always stock up with heavy inventory. So we thought that was a
unfortunate thing that happened during that time frame. Not people purchasing the
And so people are aware Echelon is pretty high-end product. So I hate to compare you to Peloton, but that's effectively what Echelon is.
to $2,000, half the price of our leading competitors. But we haven't seen any problems. But the biggest concern we have is the trade shows. A lot of trade shows are being canceled in our industry. The King Kong Fair in China is being canceled. There's a show in Taiwan for sporting goods being canceled. And one of our leading customers is not going to the fitness show in San Diego coming up. Business opportunities are going to be lost and delayed.
Okay, so Josh, let's turn to you. You're on a much different end in terms of the price spectrum. These are toys. One of these kind of reminds me of my lacrosse game growing up here, the Pop and Pass. Interestingly enough, both this Pop and Pass and Birdie Golf, which are some of the products you manufacture, could they be helped because you have some availability of this product at a time when retailers are desperate to put stuff on shelves?
Yes, Kelly, absolutely. And before I get to that, I just want to say you heard it first on the exchange. Christmas is not canceled. There will be toys for Christmas. But there were short-term challenges we faced in terms of delays on outdoor toys specifically. For summer, that would normally be shipping now, and then maybe like in a month to 6 weeks would be on the shelves at Walmart and Target and those places. So there's a delay in the outdoor products, and so some of the larger retailers were reaching out to all their suppliers here and saying, hey, who has domestic inventory that we can grab now available? And then luckily for us, we brought in our products early at the end of last year. So
And that was just by coincidence? Or?
honestly, it was because it was a new category. The outdoor summer toy market was a new area that we wanted to go into. So we just happened to bring them in early last year. And so we're sitting on a warehouse full of products in Portland. So we're like, yeah, we have stuff to sell you.
Right.
For us.
You can take advantage of it. So let's talk about what you're seeing on the ground. When our producers first spoke with you, you said your factory in Guangdong was running at only 15% of capacity, and you're up to where now?
As of now, as of today, we're about 50% capacity. There's challenges with a lot of the sub-suppliers actually delivering everything from the screws you need, blisters, packaging materials, all these extra things that you need to finish your product. There's delays there that we're seeing about 30 to 60 days.
Tesla looks like it's ready to give up some of its gains today. As I'm watching the ES pull back.
We plan on keeping prices the same. We'll probably eat some margin loss on our side, but we don't foresee the prices going crazy or spiking at all for fall. Again, I think.
But it may just be choppy.
That will be pretty much. It should be fine.
What would you say people need to know, Lou, about what's happening in China right now?
Well, I think the Chinese actually, unlike we've heard from a lot of people, I think they dealt with this tragedy pretty well. And they put a lot of systems in place. When I've been going to China for the last 3 or 4 years, ever since SARS, you walk around the
Hey, what's up, Illil?
So you can't go in unless you make you remove your hat. So we put those type of systems in place in our factories. Everyone has to clean their hands. Everyone has their temperature checked. We disinfect the factory once a week, fully disinfect. We clean all door handles every single day. So they put a lot of things in place. And I also mentioned to you about the WeChat on their chat thing where they're making people not go into certain areas if they've been in infected places.
We have to go, Josh. I just want to ask you, if the slowdown comes to the U.S., is that a bigger problem for you at this point?
Because we have most of our product already here, we're in a good position where we can continue shipping. And I think, Amazon, we were talking about this off air, Amazon, for both of us, is a big channel for us to get product to the consumer. So I think as long as Amazon's running, we can still sell them at least. But.
All right, and get those delivery guys out there.
Yep.
All right, guys, thank you both. Really appreciate it. Much more robust view of what's going on. Again, Josh Wurzel and Lou Linton. Well, the Dow has hit 4,000 points in the past week, but it's posting a big rebound today as investors bet stimulus is on the way worldwide. Is this a real turnaround? We'll ask. Here are the best performers on the NASDAQ 100 today. JD.com.
The following message comes from Almond Board of California. Did you know almond orchards, maybe for most other plants, can help honeybee hives?
It is crazy. It was. Last week was good for me.
It all starts with an invitation to get behind the wheel, to go out on the open road, to feel a rush of adrenaline. It starts as an invitation to drive a Lexus vehicle, but it becomes an exhilarating experience. The invitation below is relevant. Your invitation is always open. The offers only last through March 31st. Click the banner.
This week, though, until we get some better, direction instead of this just back and forth chop. You know, we had this nice move this morning, and then just back and forth. Just gave up the 200 here. Just meh. Gotta be careful.
And can work faster for some men. No in-person doctor visit, no waiting at a pharmacy. It's 100% online and shipped discreetly to your door. Visit Gucci.com and enter the promo code PLAY for a free month supply. Just pay $5 shipping. You're both gonna love it.
Live. To be alive at a specified time. To have an exciting or fulfilling life. If you're like most of us, maybe you thought at some point like you weren't truly living. This is my third book with the word live in the title. And I wanted to call this one simply Live. Because how are we going to get the message of living original or living fearless if we do not truly know that our life is valuable enough to live? I believe life got
When is their ER? Ooh, tomorrow. I mean, I think a lot of these companies that are reporting are going to come out and lower guidance and say, we don't know what's going to happen with coronavirus. So, they might report great numbers and lowered guidance. So it's tough. I don't know what kind of move they're pricing in.
Welcome back. Quite the rebound in the market today. We're off the highs though. Dow was up 815. The Dow at 690 right now. Most action in the past hour. Investors are betting that central banks around the world will be riding to the rescue. But is this a real turning point? And dare we say a bottom? With us, Steve Grasso. He's director of institutional sales at Stuart Frankel and a CNBC contributor. Steve, again, it's tough to try to call the bottom unless you feel like you want to kind of go that direction. Maybe we'll just focus on what the market is expecting out of this G7 meeting tomorrow.
Yeah, I don't feel comfortable that anyone should be calling a bottom just yet. I did feel comfortable on that 28.55 level in the S&P.
So it looks like they're pricing in about $9. That means into the price of the options contract. So you just look at the in the money strike or closest to the money. So if I look at a 107, the call is, the ask is 450 on the call and 450 on the put. So it's a $9 move that they're pricing in. That tells you how much, they're expecting, what kind of move they're expecting. Yep.
we begin with stocks and Bob Bassani with the very latest. Bob?
Kelly, we're just off the highs. The question is, why? Why are we getting a nearly 800-point rally? And there's two essential reasons for it. Let's just take a look at them. Number one, we have extreme oversold conditions. We'll explain that in a minute. And number two, we have hopes for fiscal stimulus and hope for coordinated monetary stimulus around the world. And there's indications that those are coming together as well. There you got your rally. Just take a look when we say extreme oversold conditions. This is a relative strength index. It shows you how much the market momentum is moving in the last couple of weeks. 19, when you're below 30, that's extremely oversold. Near 19, that's stupidly oversold. You very rarely see this. It's a screaming buy on a traditional way to look at the markets. Another extreme indicator, we have NYSE, the volatility index here. We were at 49. That's almost 4 standard deviations away from it normally is. Here's 50 and even 80 back in 2008, but we never saw those levels ever again in history. So when you get up here, usually within a short period of time, the market will move down again. Then we look at NYSE new lows, nearly 1,000 on Friday. That's almost 40% of the New York Stock Exchange. You don't see that very often. That's the highest since December 28th. Another screaming indication of at least a market bottom temporarily. And then we have high yield, enormous
Bobby, what do you think about the March 20? I mean, I'm again, until we get some confirmation that the, market drop pullback is done. But those March 20 Apple 300s are interesting. 785 by 790 is what I'm showing. Can I fix Robinhood? Yeah, get off of it. That's how you fix it. Well, everything's got a lot of premium on it, but right now my favorite is TradeStation, but I have accounts at TradeStation, E-Trade, and Fidelity. But the only one that I haven't had any issues with has been TradeStation. I mean, E-Trade and Fidelity are, at least for the most part, working, but I have had some issues. Yeah, and I hear Schwab's been pretty stable. Sounds like we got some call flow in Disney coming in. Got all these puts at the bid and calls at the ask. Another sweep on these 120s. March 6 120s. Interesting. God, that's another tough one, right? Like, more negative news, less people going to theme parks. Definitely going to impact them. Yeah, I agree. Too risky for me. Well, I honestly don't see anything else that I love. I'm going to take off early. I might come back towards the end of the day for the last hour or so if anybody's around. But there's no point in me talking through stuff just going back and forth. So, yep. Not much fun. Pretty much just sitting on hands. Apple's still looking decent. They did get an upgrade this morning, but yeah, I'm just not seeing anything I love. So y'all enjoy the rest of the afternoon. Like I said, if I come back on, I'll post it in Discord. Let you guys know that I'm going to pop back on. I'm going to go find something more entertaining than staring at this shit while it's not really doing anything. So I'll catch y'all later. Enjoy your afternoon. See ya.